Good morning, everybody. Welcome back to another episode of the Market Open. It is Thursday, April 3rd, the day after Liberation Day, which, based on what we're seeing in the pre-markets, based on what we saw last night in the futures, actually truly does feel like liquidation day. But we're here, and this is going to be, I'll just say it right now, starting off the show, it looks like it's going to be a nasty day. It looks like it's going to be an ugly day. The cool thing about these days is at least we have each other on these streams and we can be together as a community. But from what it looks like in the pre-markets and based on what it looked like last night when we got these tariff announcements, which we will spend the majority of the show diving into and trying to get as much analysis as possible on what the hell happened last night, what the heck Trump announced, it looks like it's going to be ugly. The S&P 500 is down 3.58% in the pre-markets. This is the new low for the S&P 500 this year. This is the worst day for the S&P 500 in the pre-markets. Obviously, when the market is open at 9:30, we'll see how bad it gets, if it rebounds, if it bounces, if this is kind of a bottom, if this has a lot, or if the bottom is falling out, right? If it has a lot more further to go. But it's nasty. There is no sugarcoating it. It is nasty. The S&P 500 down 3.5%. Meta is down 5.5%. The Qs are down 4.3%. NVIDIA is down 6.19%. New low for 2025 on NVIDIA in the pre-markets, 103.57. ARK is down 7.6%. PayPal's down 5%. Block is down 5%. Bitcoin is just above 81,000 right there. That's down about 2%. Nike is down 13%. Lululemon is down 15%. Apple, which is even more surprising than the S&P 500 being down 3%, Apple being down 7.8%, probably contributing to why the S&P 500 is down 3%, because Apple, I believe, is about 7% of the S&P 500. I don't remember a day when I saw Apple down almost 8%. Definitely not in the pre-markets. But you got Apple down 7.8, Amazon down 7.2, Tesla down 6.5, Robinhood down 12.3. Even gold is down today. I mean, you would think there would be a little bit of momentum there. No, gold is down 1.69%, which means cash is kind of just literally going on the sidelines, money market funds, but it is not going into anything where there's any level of risk. SoFi down 9%, Palantir down 7%, Celsius, our beautiful hedge this whole year, down 7%. You kind of get the point. It's an ugly, ugly pre-market that within the next hour might turn into a relatively ugly day. The one thing that is red, which is good, is this 10-year. We'll talk a lot about it in a bit, but this 10-year is at just 4% currently right now, 4.029. Looks like it wants to come in below 4, which is what the administration wants, quite frankly, and they might get exactly what they want. The only downside is obviously stock market would have to fall pretty aggressively for them to get that, which is happening right now. So, yeah, it's a nasty pre-market, and it looks like it's going to be nasty as we get into the broader market open. Now, I guess we'll start off with the discussion on tariffs. First of all, let me give you guys my kind of raw reaction to what happened yesterday, and then there's a lot of specific details. If you missed the conference yesterday, if you missed any of the coverage, we'll talk and go super, super in depth on it. We got Bessent, we got Lutnick, we got a lot of different commentary from the White House officials trying to justify what they did. But I want to talk about kind of my raw thoughts on it before we get into it. And then we'll go from there. Thank you, everybody, for being here. Good morning, good morning, good morning. We'll have a lot of coverage throughout the day. We'll try to get everyone caught up on exactly what's happening and try to see when the market opens how exactly the markets are going to interpret this. Because right now, where it's after hours pre-markets, I mean, the volume is not that high. When the market really opens, we'll see if this is a true, like, full-on sell-off, if someone steps in to buy, or kind of how this ends up playing out. All right, so what happened yesterday? Yesterday was April 2nd. We had the Liberation Day. The perceived Liberation Day is what Trump called it. Within the first 10 minutes of the announcements of tariffs, the market was mooning. Robinhood was up 5%. Bitcoin was up 3%. Tesla was at 290. NVIDIA was at 112. I mean, everything was going crazy. And the reason why that was happening, which, you know, in hindsight now, it makes sense why the opposite is happening, and we'll talk about kind of how this is playing out, is that Trump announced 10% import tariffs across the board. That was the first headline. And then he spent like 30 minutes talking about like random stuff, right? Like it was like almost like a campaign speech. But the first 10 to 15 minutes of the press conference yesterday was, hey, we're doing 10% tariffs across the board, and they're going to be on imports. The Wall Street Journal sends out that headline, And almost exactly like what a lot of us have been talking about here, the market goes up. Why? Because it was priced in. When we talk about the market pricing in stuff, what I believe the market had priced in is 3 buckets of tariffs: 10%, 15%, and 20%. That's it. 10, 15, and 20 across different sectors and different countries. But the market had shown us over the past 48 hours that they were willing to deal with that. We weren't at the 200-day moving average. We weren't at the very lows of 2025. We were kind of right in the middle at that 560 level. And the sort of green momentum during the day, and then the really green momentum as soon as Trump started talking, was basically the market saying, okay, cool. We priced in 15, 10%, 10, 15, 20% buckets of tariffs. Trump just announced universal 10% tariffs across the board. That's good. That's what we wanted. That's what we expected. We can live with that. We can deal with that. All of our fancy mathematical modeling in terms of recession probabilities are now in check. We've kind of adjusted for the equity risk premium. We're good to go. And, people were relatively happy when that was the extent of the announcement. And then 30 minutes later, which, we were waiting for 30 minutes on like what were the actual details, because again, Trump was just talking about a bunch of random stuff. But 30 minutes later, he actually gives us what this administration's true reciprocal tariff policy is. And it is, let's just say it's one of the most absurd things I've ever seen in my life. I did not predict this. I think the entire market did not predict this. The one thing I said yesterday in the morning was like, what would crash the markets is something totally left field, something that no one is expecting. But it's Trump, right? And so you got to account for the fact that Trump could do something that's totally left field, because that's just the nature of his character. And that's what he did. And not in my wildest dreams would I have expected this to be the announcement. But this was the big announcement. We are charging reciprocal tariffs across every single country in the world, no matter how big or how small their tariffs currently are on the United States. And if they're very small, then we have a minimum rate of at least 10%. Trump calls it the USA discounted reciprocal tariffs. And that is going to be half the percentage of the tariffs that those countries charge us. VIX is up almost 25% right now, correct? So, China charges us 67%. We'll get into that 67% number in a second, which means the USA is going to charge China 34%. The EU charges us quote unquote 39%, which means we're going to charge them 20%. And it goes across the board. Now, as soon as this was announced, the market just realized, holy crap, we had priced in a max rate of 20% on imports across the board. Like, I don't think the market would have been mooning today if he announced 20% across the board, but I don't think the market would be down 3%, because to some extent the market knew, okay, 20% was a possibility across the board, and we have to factor that into our models. Now the market is trying to figure out, how do we factor in 20% against Jordan, 44% around Madagascar, 10% around the UK, 24% to Malaysia, 32% to Indonesia, 25% to South Korea, and 34% to China. Like, how does the market factor in all these random different import percentage reciprocal tariffs against all these different countries that have fundamentally different sectors and different goods that they import to us? It becomes a mess. It becomes an absolute mess. It makes no sense. Like, there is no realistic way that the market can, when we talk about this concept of uncertainty and tariff volatility, I mean, when you have the level of uncertainty that you have of a different percentage rate, I mean, there's no level of certainty there in the context of what these countries are going to be able to import to us or what we're going to have to pay to them as well. It just creates a narrative of, we don't know what the hell's happening, or at least the market has no idea how to mathematically model what's happening. How do you put an earnings multiple on an EPS number for the S&P 500 if you have no clue how literally 240 different percentage rates on different companies or different countries are going to affect all the different companies that do business with the United States? So that was the big reason why the market was upset. Now, that's bad, and it's annoying, and it's like it's pretty wild. What is even worse than this random percentage, this half percentage reciprocal tariff idea that Trump probably thinks it makes sense because, like, oh, if I'm going half, then I have room to negotiate to go even higher, is how they calculated the actual percentage numbers, which from the beginning, no one understood. Like, as soon as he announced it and we actually got to see the chart, no one understood how they got these tariffs or how they got these percentages for what the countries are imposing against us. Well, this is how they got it. And this, quite frankly, I'm just going to be honest, it makes me feel like a third grader consulted the United States Trade Council on how to come up with these percentages. And this is another reason why the market is absolutely losing their mind right now. The White House formula for calculating its tariffs. Now, this has not literally been confirmed by the White House, but this is what pretty much everyone last night tried to do to come up with an answer, because no one knew how the hell we got 67% or 39% from the EU. The Trump administration is taking our trade deficit with China, which is $291 billion, and they're dividing it by the imports we get from China, which is $433 billion, and they're equivocating that to 67%, aka the rate that China charges us on tariffs for imports into their country. I don't know if anyone understands how absolutely insane this is, but this is insanity. This is China obviously does not charge us 67%. The EU obviously does not charge us 39%. Thailand does not charge us 90%. But if you do this type of math, and look, I'm not the best, mathematician in the world, but at least I can come to a better conclusion that you don't take the trade deficit divided by the imports and say, hey, this is exactly what we are being charged, so we're going to go half of this because this is the percentage of the trade deficit over the imports. That's not a percentage rate. That doesn't make any sense. Like, you can't say, like, even when we saw that number, within the first 5 minutes of Trump saying the EU charges us 39%, a lot of you guys in the comments yesterday on the market close were like, no, we don't. Where we get 39%, and 39%. So everything we import from the EU is 39%. That doesn't make any sense. Like, that's just not true. It's just not true. The Philippines is not 34%. Israel's not 33%. Bangladesh is not 74%. But if you take the trade deficit and divide it by the level of imports we send to them, you get that type of a percentage. And basically, over the past couple of over the past 24 hours, I've been seeing a lot of takes by people say that this makes absolutely no sense. And I would have to say I agree. These numbers and the way they've calculated these numbers to get this half reciprocal percentage, it can't make sense, which leads me to believe, and maybe this is copium, but it leads me to believe that these are negotiating numbers. These are numbers that have to be taken away. And if you believe that these numbers are going to be stringent or rigid over the next 4 years, then, well, I guess let's read what Dan Ives is saying. He pretty much is guaranteeing a recession if this ends up happening. Dan Ives today on these tariffs. In the Rose Garden at the White House, President Trump laid out a jaw-dropping reciprocal tariff chart that will be showed in classrooms and be written about for years to come by economists because they are so illogical and absurd. Let's start there. First off, the tariff numbers showed are factually incorrect from what other countries charge the U.S. They are a convoluted set of numbers and calculations that appear to be taking each nation's trade surplus by their total imports with the U.S. To be clear, these are not the actual tariff rates. If a ninth grader in high school presented this tariff chart to a teacher in basic economics class, the teacher would laugh and say to sit down and work on the assignment. Really tough words by Dan Ives here. The reason we are saying this is over in the coming 24 hours is because the world will quickly realize these tariff rates will never stay as they are shown. Otherwise, it would be a self-inflicted economic Armageddon that Trump would send the U.S. and the world over to in the coming year. So Dan Ives is kind of saying, hey, there is no way, logically, you can think that these rates are going to stay still, because if you do, then hello to a recession. We have to assume this is the start of a negotiation and these rates will not hold. Stocks will sell off massively, but ultimately our view is that these numbers would throw the U.S. into a clear recession and cause stagflation almost immediately if they hold, and they will not hold for long in our view. UBS came out yesterday as well, and they said we are projecting the annual inflation rate in America to now be 5% if this policy were to persist. And if this policy were to persist, we would price in a significantly higher chance of a recession than what is being shown right now. So this is why the stock market is down. It is absolutely absurd. I did not expect it to play out like this. Now, again, yields are dropping, right? And we shared this theory. I know a lot of you guys don't like this theory, but we talked about it. Like yesterday, a lot of people started bringing this theory up again, which is that Trump's trying to crash the market to get yields to come down and basically force the Fed's hand. And as a result of forcing this hand, the Fed is inevitably going to cut rates, because the Fed for now is not cutting rates. And the Fed has no desire to cut rates. By the way, initial jobless claims came in this morning. We're only at 219,000 versus 225,000 expected. That is not recessionary. Recessionary is 350 to 375,000. So when you look at the job market, you see the great ADP report that we got yesterday, 155,000 versus 120,000 expected. Then you see the initial jobs claims, 219,000 versus 225,000 expected. The Fed has zero incentive to use the labor market as a foundational justification to say, hey, we're going to cut rates. So what do they need as a justification to cut rates? Well, you might need some craziness. You might need the Joker to just cause chaos and laugh about it. And I think that's what's happening right now. I think that's how this is playing out right now. There is no world in which these percentage rates are going to be sustainable. And if I'm wrong about this, then I'll be wrong about this. But if I'm wrong about this, I wonder if we truly do have a recession at that point. Because it is very, very hard for me to imagine that the global trade dynamics are even somewhat stable with 17,000 different import percentage rates that we have in terms of reciprocal tariffs, unless it is being used as a tactic to get these countries to get rid of their tariffs, which basically Trump's just saying, I'm crazier than you expect me to be, so drop your tariffs. And maybe that works to an extent. Or if the Trump administration truly feels that they're going to bring so much manufacturing back to the United States because of how crazy these tariff percentages are, that it's going to create this American renaissance of growth, which maybe it happens, maybe it doesn't happen. But if you believe in what Dan Ives just said right there, you kind of have to believe that there's no way that this is the version of Liberation Day that Trump is talking about if you are also bullish on equities, much less technology stocks. S&P 500 right here down 3.73%, 543.48. There's a part of me that wants to say the market's going to look at this, call BS, and bounce, maybe not today, maybe not tomorrow, but essentially say there's no way this is sustainable and they're going to move forward from this. But then you never know, because it's like yesterday, the market thought that the worst was priced in 15 or 20% across the board when it was only 10%. That's why we rallied as much as we did in the first 10 minutes of that conference. And then we got hit with this left field hook around, all right, it's going to be these reciprocal half tariff percentages based on what other countries charge us. So look, it's wild. It is pretty crazy to see how this is playing out. Let's listen to Lutnick. He's on CNBC right now. Let's see his justification. Then we'll listen to Bessent. We got a lot more analysis to come in terms of the nitty gritty of these tariffs, but this is the reason for why the markets are down right now.
Unexpected for you, about right? I mean, you saw Monday was kind of like a bonus, the way it turned around. And but when it finally did happen and we got the numbers, was this reaction, is it overdone, you think, or about what you thought?
Well, I think the long term or even the medium term, you've got to expect the United States of American markets are going to do extremely, extremely well. I understand the reordering of the rest of the world's markets, but they have been taking advantage of the trading policy, the markets policy. All the policies of the United States of America were designed to make you rich and make us poor. You know, take our factories from us, go build elsewhere. I mean, imagine this. Why are all of our pharmaceutical products, the ingredients to our pharmaceutical products, made in Asia? That's not cheap labor. That's just a failed policy that lets the rest of the world gut America. And that's what Donald Trump is here to address, and he's going to change it, and he's going to protect America for our children and our grandchildren.
Hey, Mr. Secretary, who came up with the equation that we've shown? I know it's hard to get a clean number for tariffs plus all the other things that you would constitute as unfair trade, whether it's currency manipulation or regulations or whatever. But there is some, I don't know if I'd call it confusion, but there's some downright derision about using a trade deficit imbalance and then subtracting it and, you know, putting it over another and coming up with some of these what look like almost arbitrary numbers taken. There it is. Did you come up with that? I don't know if you had advanced calculus or something.
All right, the council, stop. The Council of Economic Advisors, right, coupled with the United States Trade Representative, they have huge staffs of economists who study this and have been studying this for years. They put out the non-tariff trade barriers. I'll give you an example. Yesterday, I was talking to a trade minister of a big country, and I said, look, we can't sell cars in your market. You've got to do something to change that. It's obviously unfair. And at the very end of the conversation, the trade minister dropped his head and said these words. He said, fine, we will provide your car manufacturers the same subsidy we provide ours. Just think about that for a minute. So you've got all these countries, they charge a VAT or a consumption tax. What do they do with that tax? If they turn around and sell really cheap energy to their steel company, then their steel companies destroy ours, put ours out of business, and then all of the steel goes elsewhere, and we can't defend ourselves in a war. If they take that and give it back as a subsidy to their car manufacturer, then their car manufacturer actually has a cost of $40,000 when our car manufacturer has $50,000. And of course, we're never going to sell a car. So this is the reordering of fair trade. And what happens is people think it's all about tariffs. It's about those non-tariff trade barriers.
Well, it'd be nice
That's what we are addressing now.
It'd be nice if everybody on that list, all those countries, said, you know what? We've seen the error in our ways, and we're going to go 0-0. We want to make it fair across the board. But how likely is that? How soon do you expect to see some concessions, or conversely, retaliatory tariffs, which just cause this to go much longer than anyone probably wants, to be more costly, and could be a full-scale trade war if it goes that way? Which are you expecting?
I expect most countries to start to really examine their trade policy towards the United States of America and stop picking on us. Stop saying that we can't sell our corn to India. Stop saying that we can't sell our beef anywhere. Just stop treating us so poorly. If we are the great consumer of the earth, the United States buys everybody's products. We buy everybody's goods. You just have to treat us fairly. And that is the problem. So some countries, which have these VATs, and they use these VAT taxes to, they basically subsidize their domestic production, right? That's got to really be balanced. We've got to figure that out together. But what you're going to see is you're going to see tariff rates decline. You're going to see the opening of all of these global.
All right, we'll get back to Lutnick in a bit. Let me bring on one of my favorite market open analysts to get his perspective on what is happening right now. Kris Patel, can you give us some thoughts on, well, first of all, good morning. And can you give us some thoughts on what you heard last night?
I was listening to all of this while I was flying, right? So initially that 10% tariff thing, the markets were ripping, right? So clearly we saw that there is a certain level of expectation on the tariffs that the market is willing to bear. But then the unhinged part came, which was the extended tariffs that clearly were not reciprocal. Okay, so if we looked at like how they addressed the formula on these tariffs, they were not based on anything that the other countries are charging us, or even a calculation based on their VAT and all this other nonsense that these guys were putting out in the first place, which was, oh, this is reciprocal. Like, no, it's not reciprocal. All you did was you took the trade deficit that you have with a country and said automatically, like, hey, this is the formula that we're going to use, and blanket it over everything. The problem is, what a lot of these people are not necessarily understanding is that we don't need to manufacture everything on the planet. Like, why do we need to manufacture $5 t-shirts? Like, we don't want that industry. We make high margin software finished goods. That is where our strength is. And we import all of that into these other countries, and we have huge surpluses when it comes to that. So our companies, the global companies right now, make a huge amount of money by developing products and then selling them overseas at huge markups, and that money comes back to us and into our capital markets. So all you're doing right now is you're trying to mess with this current global economic system. Some of it may be political, I don't know, like maybe trying to placate to a base, but the policies that they announced yesterday, in my opinion, long term are very damaging to the country, because now what you're starting to see is that people and other countries are going to basically look at us and say, you know what, the US may not be a reliable trading partner. Even if right now some of the tariffs are rolled back, countries are saying, look, this is a vulnerability for us long term, because God
Chris,
knows
I,
when the
I want
next.
to back up real quick and ask you about the percentages. So, were you kind of just left wondering how absurd these percentage rates were? Like, what was your reaction to when you found out how they came up with these numbers?
Well, that's the thing. That's the part that shocked me the most, which was there was no real logic behind it where you're trying to individualize rates on a country. Like you look at a country like Cambodia and you're like, yeah, Cambodia's treating us unfairly. I'm like, look, the Cambodians are a low wage wage manufacturer.
Right.
Okay, they're not trying to rip off the United States. There's no like, oh yeah, let's go rip off the. No, they're poor people making goods for cheap, you know. And now you're saying, well, let's punish them for doing that. The other problem that I'm starting to like, I'm trying to understand, like, all these people are like, oh, we want to bring these jobs back to America. I'm like, bro, unemployment's at fucking 5%, less than 5, almost less than 5%.
4.1. Yeah.
Yeah, like, where do you think all these jobs, like, people are going to be working? And like I said, why do you want to manufacture $5 t-shirts in America, paying someone 30, 40, $50 an hour? You can't handle that. So in my
Okay, so
opinion,
here's another question here. So let's say,
let me just finish my thought on this one. Let me
Okay,
just
go
finish
ahead.
my thought. Instead of thinking of this as actual reciprocal tariffs, this is just a tax. I mean, I didn't want to, I really did not want to believe that being the case. Like, I really tried to justify it in my brain over the last, like, 2-3 months that, hey, this is actually something to do with bringing jobs back to America. It's not. This is just a tax. All right. They just basically passed a tax that consumers are going to have to pay. You think rich people, they're like, yeah, let me buy 5,000 t-shirts. No, they buy one t-shirts just the same as a middle class and lower income person does. But the tariffs are going to hit. And basically the rich person is going to be like, okay, whatever. I'm not going to feel it. But the poor and the middle class person are going to feel a lot more, So unfortunately, I think this is the one time where we do have to accept the fact that this is a tax on poor and middle class people. And the sad part is the delusion that we're living under is that we're trying to do this on a reciprocal basis. I'm over that narrative. To me, this is a definitely a tax.
Okay, so what a lot of economists said this morning, UBS said 5% inflation. Goldman Sachs says probability of recession closer to 35, 40%. Dan Ives coming out saying, like, there's no way you can believe these tariffs are real. What is your opinion here? Do you believe that a year from now we're actually going to have 34% reciprocal, quote unquote, tariffs against China? Or do you think the Trump administration is going to realize there's no way you could have all these different import percentages against different countries, and this will be taken back, and then the market might bounce off the idea that this is just not going to happen?
I honestly, at this point, I can't tell with this administration what they're going to do. My only thing is, if you believe that companies are going to be moving their manufacturing back to United States, especially the lower end goods, you're living in a delusion, right?
Yeah,
So
yeah.
in my opinion, this is just a tax. Maybe this will balance the budget, and that'll accomplish some short to medium term goals. I mean, we are seeing the 10-year treasury absolutely collapse on itself, right?
Right.
So, and a lot of people are questioning right now, looking at the market and saying, well, how come companies like, that are software based, why are they going down today too? The reason why is because the arsenal that the other side has is that they have trade imbalances with software and technology. So if they want to hit us back, they'll just hit back with what's that thing called, like a services tax, digital services tax, which the Germans and the French are already pushing on, right? So it really does come down to people thinking that the US has all the leverage in this. And the thing is, maybe individually you have leverage with a country where you can say, you know what, France, I don't want to deal with X, Y, and Z, or hey, Vietnam, I don't want to deal with this. But when you target the entire planet, what you're essentially doing is getting everyone on one side of the table and you on the other side of the table, and that's the dumbest thing you could do, because now you're giving the incentives for the other sides to get together and say, you know what, maybe we don't need to be as closely aligned with this country anymore. And not to mention, in my opinion, in the future, what you're also doing is you're going to be opening up the idea to a lot of other countries that we need to get our own domestic manufacturing back. We need to get our own domestic, industries back to the point where we're not reliant on the U.S. for anything. And that in itself reduces global trade. And if global trade goes down, then capital efficiency goes down significantly also.
Do you think this is a low in the stock market, Kris, or do you think we've got lower to go?
I mean, at this point, I don't know. Like, the markets are going to interpret things in a whole host of ways. My biggest concern in the short to medium term is just how this is going to play out on companies' earnings. Some of the things that are happening could end up benefiting some of the companies that we have. As an example, any company that has a high level of leverage on the balance sheet, they're going to do well, because what's going to happen is your interest rates are likely to come down faster. So if we do end up getting a recession, then that gives the Fed the reason to cut. You're also seeing a lot of people buying up that 10-year, even the 30-year treasury, in the anticipation that this could be a long drawn out thing, which means that the cost of capital could end up, being more favorable for them. So that's where I'd probably look for some opportunities, if there is a place where you could find opportunities. And once again, it really comes down to, like you said, the companies that are like Verizon, that are insulated against tariffs, but they benefit from the capital structures, where if you have lower interest rates, then they can refinance at lower rates, right? Real estate is the same thing. Like, if you own real estate here in the US, you're not impacted by tariffs, or at least you're not going to be impacted significantly by tariffs. What's going to end up happening is you're going to be renting to people. You're going to be able to lower your interest rates if you have a higher mortgage, and you'll be able to rent it out, at a fairly good price. So your margins will expand. So I think real estate, especially in certain things, might end up working out well. Companies that focus on real estate for manufacturing, because I mean, I'm sure that there will be some companies that will, bring manufacturing back. And there are companies out there that are in the REIT space that do, like, they make warehouses, they make factories, and then you rent the space, and they could end up, benefiting a little bit from this. But overall, I think margin valuation, what is that? Compression is going to be a problem, especially in the very, very short term. I have a feeling that some of these things could be rolled back. But once again, that's something that we're just going to have to kind of wait and see. There's really nothing I can say right now that could hold true for the next 24 hours, 48 hours, 72 hours. This is how the markets are under this administration, which is completely unpredictable.
What do you think about Apple being down 8%? Like, that doesn't usually happen. Is that a China thing, or is that a market kind of?
90% of Apple products are made in China. So if you import something and you have to pay 50% duties, I mean, bro, an Apple iPhone is $1,000, right?
Yeah.
Which now means if you want to go buy it, and if Apple wants to sustain those same margins, they're gonna have to charge $1,500 for that same phone. Or Apple has to eat the cost and sell it to you for $1,000, but literally their gross margins will go down by 50%. So the question is, which one is who's going to blink on this one? Is Apple going to blink, or is the consumer going to blink and say, you know what, I'll pay the $1,500?
So, okay, we have Q1 earnings coming up in literally 2 weeks. Anything can happen within 2 weeks, but I would imagine every tech company, even if you're Meta, Google, Amazon, whatever, has to potentially account for what tariffs will do to their business. And do you think we're going to see a decent lowering of guidance for 2025 that could obviously affect valuations again?
That could very well happen. I mean, there's also areas where I think some of the companies might end up scaling back some of their capex and spending plans until they understand what the total ROI is going to be in the future. Because the last thing you want to do is spend money and capital on something, and then in the future you don't know what the demand is going to be like because of all the tariffs. I mean, that's the same situation that a lot of companies are going to be asking themselves, which is, what is the demand picture going to look like next year? Will the consumer be strong? Will businesses be strong? Will there be a tariff? In which case, now the counterparty that you're dealing with, are they going to be able to withstand that? So it's definitely a very, very challenging situation that the current administration has put the economy in. And it's I know a lot of people in there's like, oh, Kris, you voted for this, blah, blah, blah. Like, bro, everyone votes for everything based on the knowledge that they have. You'd be retarded to think like, oh, yeah, I could predict everything that this. Bro, I voted for Barack Obama, and I didn't think some of the things that he did were right either, So people need to get over this, oh, you voted for this, and you deserve this because you voted. No, bro, no one deserves.
It's also easy to, like, you don't know what the Harris administration would have done. Like, you can't play
Yeah.
the counterfactual here. That's not the
Exactly.
right way to go. Kris, last question for you. Let me ask you this. Let me challenge you to be bullish today. How would you come up with a bullish narrative in the face of what we're seeing right now?
I think the only part that could be really bullish is that these things, and I'm glad that Scott Bessent said this, which was, this is the max amount that is going to be out there, which means that now there could be room where countries actually do negotiate and are able to kind of diminish their tariffs significantly, and pull them down. And that's what he said. Like, we could actually bring it to a more reasonable floor. So if we're able to get something like that, then that could be something to just basically get us out of max fear, right? Right now, the market is in max fear. So if you want to kind of like, push it up, it doesn't take very much to do it, So
Yeah.
like you saw this tweet in the morning and you posted it, this whole thing with Trump saying like the scalpel nonsense, the thing like, oh, we're done with the operation, everything looks good now, right? So maybe that's some of it is backtracking to try to bring some positive bullishness into the market a little bit ahead of a 1,200 point drop in the Dow. But I mean, this is how it is, man. This is
what was your emotion when you saw the market just tank when he was talking yesterday?
My wife was sitting next to me and she was like showing me, look, Robinhood is up 5%. I was like, yeah, I was right. And then like literally 5 minutes later, my wife like nudges me again and she's like, wait a second. Like, it just said Robinhood is down 5%. What the hell just happened? And I was like, honey, I'll explain to you when we land. And you could like, my wife knew, like, my face was just like, my face had just dropped because honestly, this was not on my bingo card list. Okay. I thought at the most we'd do like 20% tariffs on the most egregious tariff violators.
Yeah.
I was not expecting 40%, 50% on some of these countries, man.
Yeah, I think, and the reason I think we surged is because the market expected the 10, 15, 20%, and it was 10%, not 20. So the market was happy. And if it was 20, I feel like the market wouldn't have been happy, but they wouldn't have been this upset. But this thing that we got yesterday, the market was just purely upset about.
I think like I said, the market reacted on a 10%. And I think that could actually end up being the happy medium. That 10 to 20% could be the happy medium where the markets are like, yeah, you know what, we could survive off of a 10% increase in tariffs. That would significantly boost up some of the import revenue, and the consumers wouldn't necessarily feel it that much, especially when you consider the FX changes. So if you look at the Dixie, right? The Dixie is basically dropped 10% from 110 to
101.
100 to
Yeah.
101 right now. So, in terms of like total price increase, we wouldn't really even felt it because the FX would have been the same shit, The
Right.
challenge now is that, this is just insane, the amount of the amount of the level that these guys announced. Now the thing is, the Dixie would have to fall to like 75 in order to counterbalance this thing,
All right, Kris, before I let you go, I want to play you a 30-second clip of our Treasury Secretary being asked about the stock market and get your quick reaction, and then we'll be done.
10,000 manufacturing jobs last
Wait,
month.
but before you
So it
play,
doesn't
can
concern
we
you
just
today
pause
then?
for 1 second. This interview scared the shit out of me.
Oh,
Okay.
me too. I listened to all of it last night. I agree.
And the reason why this scared the shit out of me is because I don't think Scott Bessent is in the driver's seat on this one. There was a couple of questions they asked him, and he says, I don't know. Like
Yep.
he
Yep.
did not know. And so this is where I think there might be some issues in the background between the Treasury Secretary and the Commerce Secretary, and Trump has chosen the Commerce Secretary and going based on that. So if you read the Politico article,
Yeah.
it's,
Yeah.
not to mention this is the same thing that was happening in November, where there was jockeying between the two on who would end up being in charge of the Treasury. I trust Scott Bessent way more than I trust Howard Lutnick. Lutnick has this crazy like world view that's just out of scope. Scott Bessent is more of a markets guy. He understands the financial plumbing of everything. So he understands that, you know what, we need to be very moderate in how we approach this thing. And if Scott Bessent had got, his way, in my opinion, we would have got those 10, 15, and 20 brackets. And actually this market wouldn't have reacted so negatively. Instead, the Trump administration basically said, we're going to go with Howard's plan and basically just trump the shit out of everyone and do Smoot Hawley part 2. So yeah, go ahead. We could play this.
During the tariff announcement, equity futures sold off when initially they were rallying when the president only announced a 10% tariff base, and then they fell when he announced the higher rates for things like the European Union and China.
Yeah, and Marie, I've learned not to look what goes on in after-hours markets.
Okay, but since the peaks in February, stocks are down 8%. I think the NASDAQ from its high most recently is down 12%. So far, though, this kind of market downdraft so far this year is not concerning you.
Well, look, in my old business, I was very concerned about market movements, and I'm trying to be Secretary of Treasury, not a market commentator. What I would point out is that especially the NASDAQ peaked on DeepSeek Day. That's a Mag 7 problem, not a MAGA problem.
It's a Mag 7 problem, not a MAGA problem.
No. So you have to read into that. So he said the DeepSeek thing came out X, Y, and Z. So basically he said right now the current sell-off in the Mag 7 is not necessarily just related to the tariffs. It's also related to, the technology portion of it,
right.
So it's not like he's saying we don't give a shit about the Mag 7 and we're causing the pain on the Mag 7. It's just like, hey, listen, that was a problem before we got in, I think you should play some of the other parts of it, which actually are a lot more relevant.
Yeah, well, I just wanted to play that one part. So we got the market open in 2 minutes, and then you can stay on if you want to listen to those. Or
Sure.
Okay, cool. All right, so we'll get through the market open, guys, in about 1 minute, and then we will listen to Bessent. We also got to listen to a little bit more of Lutnick. But that quote, even though you can make an argument that Bessent is correct about that DeepSeek was the reason for the NASDAQ sell-off more so than like Make America Great Again policies. That quote went viral yesterday because everyone kind of interpreted it as like, all right, these guys are blaming DeepSeek or whatever, even if they're rightfully blaming it. And they're not necessarily saying that it's Trump's policies that are affecting it, which again, to an extent is right. NVIDIA was down before the tariff stuff, but given the nature of how this tariff stuff is being communicated, NVIDIA continues to go down more. We got 20 seconds until the market opens. The Qs are down 4%. NVIDIA's down 6%. S&P is down 3.4%. Let's see if we bounce or if this continues to sell off. In the pre-markets, this is the worst percentage down day we've seen in 2025. Got a new low for 2025 on the S&P. Let's see if that continues or if we get a little bit of a rebound. 9:30 a.m. Thank you, everybody, for being here. The stock market on April 3rd is now open. All right, wake your ass up. Let's get into it. S&P 500 down 3.35% on the day. Meta, new lows for 2025, 546. That is down 6.3%. The NASDAQ down 4%. New lows for 2025. NVIDIA, 103.5. That is also a new low for 2025, 6.3% down on the day. ARK Innovation down 7%. PayPal down 5%. XYZ down 5%. Bitcoin down 2%. Nike's down 12%. A lot of China exposure. Lululemon, same thing, down 12%. Lots of China exposure as well. Apple, 8% down. If anyone wants to find me the last time Apple had an 8% day, I would love to see that stat. Maybe it was August 5th, 2024. But outside of that day, I can't remember the last time Apple really had a nasty 8% day. But that's what we're seeing right now. Tesla down 5%, Amazon down 7%, Robinhood down 8.8%, Robinhood right there at 38.88, SoFi down 8.4%. You got Red Cat down 8%, Gold is down 2%, Palantir is down 5.2%, 82.95 on Palantir, Costco down 2%, Celsius down 7%, Google's down 3%, Newsmax is now down another 15% after being down 85% yesterday, from peaking at 287 on the IPO, now at $44, which means it's still up about 400% from when they IPO'd at $10. Uber is down 4%. China is down 2%. Alibaba's down 2.5%. Grab is down 6%. Venture Global is down 6%. Reddit's 9.6%. Rocket Lab down 7%. Zillow down 4.2%. CoreWeave down 12% after being up about 40% yesterday. Meta down 6%. S&P 500, a little bit of a green candle right there from 543 to 546. A little bit, but still pretty red. 546 on the day, as it is still down 3%. NVIDIA 104, so you're getting some green candles from those absolute lows that we just saw. Maybe those absolute lows turn into further lows that we are yet to see, but we do have some candles across the board. Amazon's up a little bit from 181 to 183, Tesla 265 to 269, Apple 203 to 205, but still all of these down about 5% on the day. Let's look at semis. Semis actually were excluded from the tariffs yesterday. The Trump administration clarified at like 5:30 that semis would be excluded from a majority of the tariffs. So these are still down on the day, but they might not get hit as hard. Intel's down 2%, SMCI is down 9%, AMD's down 4%, Nvidia's down 6%, Dell's down 13%. That one's getting hit bad with SMCI and the server companies. TSM's down 7%, Qualcomm's down 5%, Broadcom's down 7%, ASML's down 4%, and then Intel right here is down about 2%. In terms of crypto, all of them should be down primarily because of Bitcoin, which is what we're seeing right here. A little bit of a rebound on Robinhood from 37 to 39, but Coinbase, CleanSpark, Marathon, Hut, Cypher, MicroStrategy, all of these are still red. Now, a lot of these are not red for their 2025 lows. Like Robinhood's low, I think, was 32. MicroStrategy was like 215. So we still haven't hit those lows yet. And you know, maybe we have further room to go, but some stocks making a new low this year. Other stocks are low, but not as low as they were on March 13th, when we also had a pretty nasty day. S&P 500 right here, 547 now, down 3% on the day. Kris, let me ask you a question here before we listen to Bessent. Are you buying anything here, or you're kind of staying put with the portfolio?
No, man, I'm just staying put. I think right now we just need more clarity from everything that's happening. I was buying the dip over the last couple of days. I may end up buying some more Venture Global. I think my thing with Venture Global is that I'm in it for long term. Like, I see what the company is doing, how much cash flow they're going to be generating. And so as it gets down further and further, it just means a better opportunity for me to capitalize on it. And that's a secular trend that I think is going to be that's just going to keep going. So I'm not worried about that. But the rest of the stuff, I mean, valuation wise, are somewhat elevated considering all the geopolitical risk. So I'd say we'd have to be very, very cautious. I mean, a lot of defensives are actually catching a bid right now. So you look at American Tower, Crown Castle, they're doing actually pretty well right now because everyone's like realizing like, hey, wait a second, I don't have to deal with this. Unfortunately, I did sell out of Crown Castle because of some of the news that they had in the short term. So I'm not even getting the benefit of this damn thing, which I should have just stayed in. But hey, you know what happens? Verizon's taking a nice upward move, which I have spreads on, which is good. Yeah, it's just this is.
If we see some green candles, are you cautious that they're just like bull traps, or how do you interpret them if we end up going a little more green today than not?
I mean, it's going to be dependent on. It's going to be dependent on the wording that comes out of the administration over the next 6 months, right? And so the markets have a really hard time getting trust back. That's why you always see when markets go down, they go down like elevators, and when they go back up, they go back up like escalators, right?
Yeah.
Nice, slow, thorough rises. And you're going to see, of course, periodic moves up and down. But yeah, I think most of the sell-off, if basically you look historically, first 2 quarters are where you're going to see majority of the pain. and then hopefully the next like 12 quarters are going to be a lot more like rosier, and things will be more stable and move up. So yeah, I'm looking at this whole scenario and I'm just saying, long term, what are the impacts of this? Short term, what are the impacts of this? And medium term, what are the impacts of this? And if you're a long term investor, you're loving today's market because you're
Yeah.
getting really great companies at a discount. It just depends on how big of a discount you're really looking for. And yeah, it just goes from there. I don't think anyone's replacing Apple anytime soon. I don't think anyone's replacing Google anytime soon. The challenge is, in the short to medium term, their valuations could get compressed, and they could get compressed pretty hard. And so people are, just they're scared, and they're rightfully scared.
Yeah, I think it's fair. If you love Shopify, for example, and like I've been meaning to DCA into Shopify all year, but then Nvidia and Google got so cheap, so I haven't had the chance. But this was on my list this year. I mean, now it gets more attractive. Now, why is Shopify down 15%? Because there's a lot of e-commerce that gets done on Shopify. A lot of those products are made in China. And so from that perspective, you could see the market's correlation right there. But if you think Shopify is going to be bigger than it is 5 years from now, I mean, I'm not saying this is the best price, but if someone was interested, at least we have an opportunity today. And I think that's the one bright side of what this market's giving to long-term investors. Elf Beauty right here down 12.6%. Small caps down 4% on the day. S&P 500 down 3%. Small caps look like they're in a tough situation if we do end up getting some real tough volatility in regards to tariffs. And if those recessionary fears, again, pop up, holding small caps in a recession is going to be tough. However, the jobs data yesterday and the jobs data today, Kris, I want to get your reaction to that as well. Private payrolls were good. Initial jobless claims were good. How do you reconcile the fact that those aren't that recessionary with these tariffs that feel like it could bring us into a recession?
I think the data is backward looking. And the thing is, like, the confidence level was still somewhat okay, like medium term. But now confidence levels are dropping. So I think future growth prospects are what we really need to be mindful of. I think the 10-year has actually sniffed that out, and that's why you're seeing such a large drop in the 10-year. So right now the 10-year is about 4.04, so it's about to get to it's below its December lows, and it could end up getting to its September lows, which is like 3.6, if the Fed starts to give a little bit of more dovish guidance.
Do you think the Fed cuts now because of all this tariff stuff?
I mean, according to Goldman and these guys, no, because we could end up in a stagflationary environment. But that's something that we're gonna have to just wait and see, and see what the general impact of this whole thing is going to be. I mean, the Fed Now watch tool has basically increased the chances of
doubled from 14 to 26.
Yeah. Well, go to December. This is a more interesting thing. So if you go to the chart, go to December and look at and basically go down, scroll down, look at where it was. There you go. Look at how much the thing has changed from literally like 1 month ago. There was only a 6% chance that we could end up getting almost 5 rate cuts. Now it's up to 17%.
Wow. Yeah. So
you're seeing a dramatic rise in the expected rate cuts from the market. So, if a recession does happen and it comes sooner, then the Fed's impetus to cut is going to be greatly like pronounced. So we really don't know what the impacts of the tariff thing is going to be just yet. And how that's going to play into like the corporate spending in the next few months. And if companies are saying, you know what, we have to get lean, we have to, survive all of this, let's just start to do layoffs, that could end up, causing a higher unemployment rate. And if the higher unemployment rate gets baked into the recession and the economy, then now the Fed is going to have to cut. So I don't know. This is a whole game that the Trump administration is playing. The worst case scenario now is we get stagflation, which is low growth and high inflation.
Okay. Before we listen to Bessent, do you feel, is your gut feeling, I know it's hard to answer this, but do you think the bull market is still on right now?
I want to say yes, mainly because the prospects of productivity gains from AI are still there. you know, there's still a lot of great things happening around the world. Like we're still getting out of the COVID rut, you know, with a lot of industries, and industries are finally getting back to like recovery levels again. But now you're starting to see this. I think the Russia-Ukraine war situation is somewhat stable now. So it's not necessarily like a giant overhang on the economy anymore. So those things are net positives. Now, this trade war is a completely new phenomenon that's kind of like been injected into the markets, and it's something that's man-made. So my logic always tells me if something is man-made, it can be man-unmade.
Yeah. That's fair. It's a fair point. All right, let's listen to Bessent. For those that haven't heard this interview, it was a really good interview last night. Gives us a decent level of clarity on some of the philosophy. It also gives us a little bit more confusion, but here's what Bessent had to say about tariffs yesterday.
Okay, so let's talk about what else you've been spending a lot of your time doing. You have been up on Capitol Hill constantly. You are really working on trying to make sure that this administration can extend the Tax Cuts and Jobs Act. On top of that, more tax cuts.
Wait and see what would happen. What I would say, Anne-Marie, is I would advise none of the countries to panic. I wouldn't try to retaliate, because as long as you don't retaliate, this is the high end of the number. And you know, I think the market could have certainty that this is the number barring retaliation. So we've got a ceiling, and then we can see if there's a different floor.
So you sound like you're ready for negotiation with a number of these partners. Has the European Union, has China, has India, have these countries reached out?
Well, they've all reached out, but it's going to be up to President Trump to see what he wants to do. I think the mindset might be to let things settle for a while. Their tariffs or non-tariff barriers have been on a long time, so we'll see where it goes from here.
When it comes to China, they have a much higher rate on this list. On top of that, there's still that 20% fentanyl tariff rate. Is all of this coming together to be more than a 50% tariff rate for Beijing?
Well, yes, I think it is, and I think it's a combination of things. And you know, again, that I think China said today that solving the fentanyl crisis depends on taking off the fentanyl tariffs, and I'm pretty sure that's not the way the sequencing is going to work. They're exporting the precursor chemicals, and every day, every week, every month, Americans are dying, and it's going to have to stop.
When it comes to places like China, the president has mentioned he's willing to even look at things like TikTok to potentially do a negotiation with them when it comes to tariffs. I'm sure you're looking at things like the yuan. What's on the table when it comes to this trade realignment between Beijing and Washington?
Well, we haven't started anything yet. We've been busy with the tariffs. I've been busy, as we talked about earlier. The tax bill is going very well. So I think that we will move toward the bilateral relationship with China now that we've done the multilateral tariffs.
Plans for conversations or a trip to Beijing?
Nothing imminent.
When it comes to this negotiation, April 9th, these tariffs come in place. Do you plan on having negotiations before that date?
Again, I'm not part of the negotiations, so
Pause.
we'll see.
This is what scared the shit out of me. Okay. He just said he's not part of those negotiations. Okay. This is where I felt like, holy shit, what the F? This means that he is not part of the conversation when it comes to negotiating.
Why would he not be part of it, though?
Because he's been sidelined by Trump. I'm telling you, this is two schools of thought clashing behind the scenes. Howard Lutnick versus Scott Bessent. And Trump has chosen Lutnick as the go-to, or at least spearheading these negotiations. So if you look at the maximal tariff thing, that's always been Lutnick's idea, whereas Bessent has been more of a moderate, when it came to the tariffs situation.
Right.
So by the way, did you also see the other part on that clip where they were asking like, why wasn't Mexico or Canada on the list? And he says, I don't know. He just said,
let me play that real quick again for those that missed it. That was also incredible when he said that.
The president had this huge chart showing all of the different rates. Canada and Mexico notably missing on that chart. Why is that?
I'm not sure.
Not sure. Okay, I imagine
that's got to be insane, right? Like,
that basically means he didn't even see that chart before.
I don't think anyone saw that chart before, other than Lutnick and Trump 2 minutes before they went live. I mean, this is
Yeah, Lutnick's the one that handed it to him too. So you could see the market drop in real time when that thing came out, bro. Like I said, I think that there are definitely tensions behind the scenes that are playing out right now. And Howard Lutnick is apparently the guy who's gonna lead us into the golden age. And so far, the golden age is not necessarily anywhere near it. You know,
no, but this is a big deal. Like, the administration officials are supposed to talk to the media and give them confidence and clarity about the administration's policies. For one of the highest ranking officials to come out and say, I don't know, to an answer that to a question that, I mean, it's one of the most basic questions, right? What are we doing with Canada and Mexico? That's like insanity. That to me smells like these guys don't really have a plan right here.
Dude, I'm telling you, there is a lot of tension in the background, and the Trump administration, there's definitely fissures developing. I don't even think I think at this point Rubio's getting frustrated. I think a lot of people are getting frustrated because Trump is really shooting from the hip. And if you notice something about Lutnick, dude is literally like just licks his nuts, bro. Oh, the president is so smart. He's the best. President Trump just, and I'm like, bro, like, get over yourself. Stop this like yes man fucking routine. Sometimes you know, have you ever had a boss who sometimes was a little bit too much of into himself, and as a good person underneath, you just had to reel them back and then, look, what you're asking for is stupid. Let's kind of like dial it back a little bit. And if it's a good boss, they'll say, you know what, maybe you're right. Maybe we need to just make sure we're moderating some of the stances here. A terrible one will end up saying, no, you're right. You know, the guy who kept praising me is the guy I want to listen to. And Lutnick is a yes man, bro. And he's from everything that I saw on the All In podcast, it seems like Lutnick is the one that crafted this whole transition team and basically brought all the people on. But his ultimate goal, that he wanted to be Treasury Secretary, and he was passed over for that. You know,
that's very weird, bro. Because for Bessent and Lutnick to not be congruent on these positions, it's just really hard to gain trust, and the market's definitely not going to gain trust because of that. Speaking of Lutnick, let's listen to him on CNBC talk a little bit, and then we'll go back to Bessent.
Markets, to our agriculture, to our ranchers, to our fishermen. You're going to see American production start to rise and finally be fair. And I think that we have Stockholm syndrome. We're so used to being abused. And Donald Trump's been talking about this for 35 years.
Mr. Secretary, in terms of the suggestion that we're being abused or being fair, what would you say to the United Kingdom? Or what would you say to Australia, where we have a trade surplus, where they could look at us and say, we're the winners of that competition, and yet we are going to tariff them?
Well, look, they each have the lowest rate available, right? I mean, if you really dissect these the trade numbers that are made publicly, I mean, the United Kingdom, part of their trade surplus is that they have the London Metals Exchange, and they count the importing of bullion. I mean, come on. So, I mean, if you really dissect these things, you realize they have a 20% VAT, okay? And these things, but they work hard.
So we don't have a trade surplus with them? They're raping us too?
Well, they have a, if you looked at them and really studied it, you'd see that
Andrew Ross Sorkin is pissed
with us.
What'd you say?
I said Andrew Ross Sorkin is pissed. He's like, are they raping us too?
Yeah, I mean, I think Trump didn't give good answers yesterday. Neither did Lutnick or Bessent. So now you got the media actually trying to fight back, and they're still not getting the right answers.
Dude, by the way, VAT taxes are not like trade things. Like, they're not tariffs, okay? Countries charge VAT taxes because sometimes it makes things easier for them to basically collect revenue. So they just adopt a consumption-based thing. Like, would you consider like a sales tax a VAT tax?
Not really.
You know?
No.
Yeah, exactly. That's the difference. Is the manufacturers have the tax at their level, and then it's put into the system. Like a country like India has a 1.4 billion people. You think it's efficient for them to do 1.4 billion returns or just do a consumption tax? It's easier for them to do consumption tax. So people have just chosen different ways to do their own. The other thing is, it's not like the domestic manufacturers are getting one over on international, like American companies, because whether you make it in America or whether you make it in Germany, you're still paying a fucking VAT tax. So how is that a tariff?
So you think that his analysis around VAT and the reciprocal nature of it just doesn't make any sense?
I don't think it makes any sense. I mean, and then when you add in all this like demagoguery around like globalists, like, oh, the globalists want this, like, bro, the globalists have, the US has benefited significantly. I mean, you look at the average like median income for the United States over the last 20 years, we are at 80 something per household. It's like $80,000 per household, median income. Okay. You look at Japan, you look at Europe, they've basically been flat. So who really benefited?
Yeah, well, that's a good point. It is a good point.
Right. And Australia buys a lot of our planes, which we really appreciate. But we're really looking at the production for people to get jobs. So the stuff with Mexico and Canada, I'd really like to talk about, because USMCA is still in place. So if you make a car in America and the parts are made in Canada or Mexico, there is no tariff. The auto parts business of Canada and Mexico are not being touched. Energy prices are not being touched. You know, people need to understand, we did not today, semiconductors are not included. Pharmaceuticals are not included. Donald Trump's going to deeply study those, and those are going to come later on how to reshore from Taiwan, all that semiconductor manufacturing. We have to protect ourselves at some point, right? America has to be able to protect itself. We can't have everything. I mean, think about it. All of our electronics are primarily built in Taiwan. It used to be built here. Our policies let Taiwan take it all. And now 9,000 miles away, our way of life is being built. And Donald Trump is saying, come on, that's got to be here. That's why you've got Apple announcing it's going to do $500 billion in production here. I mean, think about it. We all hold our iPhones, which we love. Why do they have to be made in Taiwan and China? Why can't those be made with robotics in America? And you know what Donald Trump has said? They're going to be made in America.
Secretary,
I think go ahead.
Right, you also notice that he keeps like third personing that, like, Donald Trump says this, and Donald Trump, like, bro, he's such a.
But also, like, there's a reason the iPhones aren't made in America, like, because we have minimum wage laws. Like, no, that's the dirty thing no one wants to talk about. But they outsource these types of manufacturing jobs for a reason. And if we bring those to the United States, either Apple's margins go down or shareholder value goes down. Something goes down. It's not like it's just a smooth transition to United States workers get jobs now.
Yeah, and the thing is, if you look at the value chain, right? Apple makes all of this money on the iPhone. But the thing is, all that designing, all that IP work, all the application development around it, that happens in the United States. That's where the money is made, right?
Yeah.
You take that, you make it in China, and you sell it around the world. And basically all that money comes back to US capital markets. Okay. So right now, Apple makes a phone, they design it, they send it to China, the Chinese produce it, it gets sent over the entire planet. People buy that thing, and all that margin now comes back to the United States. And we end up getting all that capital flowing into our capital markets.
Which is why Apple can afford to pay a software engineer $250,000. Right.
Right. Exactly. And it's the same thing with all of our companies. Like, I think what it is people right now are turning on globalization, especially the people that have been left behind by globalization. And I totally understand that. Right. So when I see like small town cities in the United States, like small towns basically get hollowed out, and they used to have a manufacturing base, they get hollowed out. Like, dude, I definitely empathize with that. I'm not saying that their plight is not as important. And the thing is, a lot of those jobs should be retooled for something more productive. The challenge that I'm facing right now is that we as the United States have been able to basically benefit significantly from globalization, and we're turning our backs on it right now. And I don't know if it's something that this is going to end up being a long-term thing that the US adopts as a protectionist thing. Because the challenge that you run into, though, Amit, and this is the part that scares me, is that these policies are actually what a lot of socialists and Democrats they want. Okay. So if you look at a lot of the policies that the Democrats want, they're centered around bringing manufacturing and bringing that kind of stuff back here. And now the biggest beneficiaries, of course, are going to be like labor unions, especially among auto workers and everything else. But once again, it's the real question is long term, where is capital going to flow? Is it going to flow into the US? Is it going to flow into China? Is it going to flow into Europe? And the honest answer is the only reason why the US is in a position where it is right now is because the Europeans really screwed themselves, the Chinese screwed themselves, and the Japanese screwed themselves. And the South Koreans are slowly screwing themselves. And I can give you a breakdown on each one. The Europeans, basically, they outsourced energy production to Russia. They outsourced their technology and services sector to the US. They outsourced all their goods to the Chinese. And then when it came to their own labor force, they said, let's import a whole bunch of people into the country, right? And so the problem is each one of those things ended up driving a wedge into Europe's heart right now. And so Europe is like in my opinion, is the biggest casualty to globalism, you know? And then of course you have China. No one really wants to talk about this, but China is dealing with an aging population.
Yep.
Okay. And they have a lot of debt. Like a lot of people think that China is a very rich country, but if you look at the debt that they have at the local and state levels, right? They have a lot of debt right now that they're going to have to eventually deal with. And they have an aging population because of their one-child policy. The Japanese, they've been on a decline with their population, so that's a problem on its own. So I don't know. It's like there's really not a lot of great places to be in the capital markets, and maybe that's why the Buffett team is basically sitting on a whole bunch of cash right
Dude,
now.
can we talk about how he was right again? Like no one can deny it. Holding on to cash to start off the year, 325 billion. He was right.
Yeah.
Like what is outperformed that would have been a better thing than cash or their treasuries?
The only thing is gold, and believe it or not, gold is down today too.
I mean, yeah, and that just shows you how bad it really. If people are not flocking to gold for safety,
it could mean that maybe the expectations of inflation are actually coming down a little bit now, and instead people are flocking to bonds. I mean, there is a lot of cash sitting on the sidelines. Okay, so the thing is, eventually, the cash will make its way into the markets, and it just depends on where that liquidity is going to end up.
Okay, so let me put you on the spot. Give me a number on Google where you think is so absurd but still reasonable, where that 7 trillion on the sideline says, you know what, we're buying Google. There's just no way. And I'm saying Google as a metaphor for the overall tech sector. At what point does it get stupid where people
I won't give you a dollar amount on the stock price. I'll give you a PE amount. So if forward earnings drops below 15, I think that's like a definite buy. And they're not that far off from there. Okay. Yeah. Right now, forward is like 17. But once again, if forward earnings starts to come down because of all the tariff issues, then that means that the stock price could keep getting lower, right? So if you're valuing a business, I would say to people, stop looking at the stock price and look at the forward multiples on that business, because that's how you're supposed to value a business. If you look at how much the company is going to earn, a year from now, 2 years from now, 5 years from now, you can get a general sense of where the stock should be and what kind of value you're actually getting. So if you start to see, multiples on Google trading below 15 on a forward basis, same thing with Meta or any of these other major companies, then that's a good time to look. And usually you've seen like the NASDAQ. Let me see if I can find a chart, but the NASDAQ usually bottoms out at about 17 on a forward PE multiple. And then usually that's a pretty good opportunity to start buying.
That's when I think we were at 17 when we hit 420 on August 5th on the NASDAQ. So you're right about that. While you're looking for that, let me finish this Lutnick stuff, and then we'll.
Yeah. Nick, there have been questions raised already about whether a company like Apple would be able to get a carve out from this because they have promised to build more in the United States. The market's trying to figure out how permanent these tariffs are going to be if there is a negotiation taking place. Scott Bessent, the Treasury Secretary, said yesterday that we may have to let these sit for a while. But I'd also heard that you'd been in charge of already.
Real quick, we'll get back to this, but we do have ISM data right here. ISM services PMI 50 versus 53, 50.8 versus 53 expected. Business activity was up a little bit, 55.9 versus 54. Services employment 46.2 versus 53. That's actually a lot lower. That's a pretty nasty miss. New orders 50.4 versus 52. That's a miss. And then service prices 60.9 versus 64. That's also a miss. Let's look at the markets real quick. So it looks like 4 out of the 5 metrics on ISM services came in lower than expected. Yeah, I think there's that extra red candle right there. So, I mean, markets were already down. If there was any hint of a green candle, this number definitely is not helping to get that green candle. The 10-year is going, the 10-year is 0.008% away from going below 4. This ISM number probably is helping it get there. But yeah, PMI, not the prettiest metric here today.
Negotiating with some countries, maybe giving them wish lists to say, here's what it would take to get these tariffs reduced or removed. Is that the case? And if so, which countries are you negotiating with?
We're talking with all of the major countries of the world, and we've been talking to them for more than a month. This has been coming. We've said it's been coming. The key is, will they take our agricultural products? Will they treat us fairly? Can they treat us fairly? And the answer is, over time, that is going to be yes. American products are going to be better sold elsewhere in the world. But the fact remains, we are treated unfairly, and they have built structurally into their markets this unfairness. The subsidies to their steel companies, the subsidies to their car companies. That's why we don't do well. Did you ever think about why we don't sell cars in Europe, why we don't sell cars in Japan or Korea, why we could never really sell cars? It was very difficult for us to sell cars.
Because no one wants American cars.
It's not that hard to figure out.
Go ahead.
That people don't want American cars in that area. We built these cars for our needs. Like, look, no one in Europe is like, yeah, let me buy a Chevy Tahoe. All right, the roads aren't even built for that. So this whole logic that this guy's trying to apply is dumb, man. Sorry.
Basically, you're saying our cars suck.
No. Our cars are fine for our needs. We've designed cars based on what we like. The Europeans, like, try to park a Chevy Tahoe in the middle of France right now. You know?
Yeah.
Like, people are not trying to buy these giant ass cars over there. And that's the majority of the cars that we make here. The lower end cars that are low margin, we build in Mexico and we build in Canada. You know? That's the kind of logic. I mean, this is the kind of stuff that this guy, when he talks, it's mind-boggling, because once again, he's trying to justify this whole thing by saying, yeah, we want to sell more American stuff overseas. And look, there are definitely things that I think overseas people can buy more of. US energy, I think that is something that people should be buying more, because that's fundamentally it's the same thing. But you can't tell people like, oh yeah, you need to buy more Chevys that are made in America. And if that's the trade barrier, you know. And what's dumb is, if you think about it, the US right now, you, let's say, design like a Nike t-shirt, like a nice Nike t-shirt. You make it in Bangladesh and you sell it into Europe. All that money is going to Nike, which is coming back into this country again.
Yeah.
Why are you trying to build Nike t-shirts and stuff in the US and sell it over there, where the markup would end up being so costly that the Europeans wouldn't want to buy it anyway?
Well, it kind of goes to the point you made a couple weeks ago, which is that all the value in a lot of these manufactured goods is in the design and the marketing. That's why LeBron James gets $90 million. But the people who make his shoes don't get $90 million, because at the end of the day, that's not where the value creation is. Now, that $90 million in America, LeBron pays a lot of taxes on, which helps America. But if you want to make the shoes in America, it's a totally different paradigm.
Bro, the chances of people being able to afford the shoes would be next to nil, you know? And now you're basically destroying any demand for that product. You know?
Here's the chart that you want to put up.
Yeah, so just from a valuation perspective, like if you look at like how it works, about 15 is when we bottomed out in 2022, around this time. If you look in the past, in around 2020 during COVID, it kind of came down as well, but that's like a fluke. I wouldn't go based on that. 2019, it was the same thing, right? So if the S&P drops to below 15, then definitely it's, in my opinion, a good buying opportunity. So you could really buy off the lows. I mean, if you go before this, this was like great financial crisis and recovery mode. So, that's why the PEs had dropped below 15. But I think with a 15 and below PE on the S&P, that's like peak buy the dip opportunities where you're getting really, really good value during that time. Now, the reason why I wouldn't say, like, oh, you could just look at the mega caps, because if you look at mega cap 8, the forward PE is 24, but that's mainly because if you look at the PEs on an individual basis on some of the constituents, some of them are just overly extended. Like Tesla is like 99 because their earnings are declining right now and their stock price is still up there.
Right.
So that's why you're seeing this giant move to the higher part. Like some of these other ones are still not in like oversold territory yet. Like Alphabet is at 17 on a forward basis, which means that they're closer to that 15 level than most of the other constituents. Amazon also, you shouldn't use forward PE because they have a capital heavy business. So you should be looking at them more on a cash flow basis. They're operating cash versus things. So you should look at on a per share basis for that. Apple definitely should value it like a PE. Now, this is where the vulnerability is going to come in. So Apple right now with a 10% drop, their PE is going to drop significantly today. Meta's at 22, Microsoft's at 26. And Netflix is at 35. But the good thing with Netflix is that the tariffs don't necessarily impact them nearly as much. But
Right.
yeah, it's, NVIDIA is
so
at
the S&P, you think we need the S&P below 15 on a price to earnings, or where do you think
I would say at 15 it's oversold, like dramatically oversold on a what is that thing called? On a valuation basis, right? So that means that you're basically getting businesses at, like at I wouldn't say significant lows, but you're buying them at a fairly good price, long term.
Yeah,
The
right now I think
the challenge though, Amit, is that all of those forward PEs are based on today's guidance, not necessarily how these companies guide their earnings up or down. So if Google comes out and says, look, we're going to actually guide our earnings down 10% to account for the tariff volatility and tariff issues, then now all of a sudden your PE actually is going to go up, which means that you're not getting a great business at a cheap price.
Okay, so let me ask you this question, because I didn't ask you this yet. You do acknowledge that other countries are tariffing the crap out of us. What should the U.S.'s response be to that?
Well, you have to look at this on a case by case basis, like individual cases. Now, the thing is, these countries, they do apply tariffs, but they don't do broad tariffs. Okay, what they do is they try to protect their domestic bases from outside, right? So as an example, like there are countries right now, like Japan put 700% tariffs on US rice. Okay. Now, why does Japan do that? Well, because the Japanese don't want US rice in their system. They want to protect their own rice supplies. The other thing is there's also issues around how American products are made that other countries don't want to buy. As an example, like beef, like our cows, if you look at our cows, man, they're roided the fuck up, and the Europeans are like, we don't want to buy your beef because you inject all sorts of chemicals into your beef to make it, to make the cattle produce as much meat as possible. And we don't want that. And I think that's absolutely right. If they don't want to allow it, they don't want to allow it. And the way that they basically, said, instead of saying a ban on US meat imports, they just put such a large tariff that it doesn't make sense for them to import. I mean, you ever heard the stories where people go to Italy, they'll eat like pizza and they'll eat all sorts of like food over there and they won't feel bloated. Their diets are still normal, right? They feel okay. But then they eat like American version of the same thing and all of a sudden they have all sorts of health issues. So it's like, what's in our shit that they don't want? And the Europeans are very, sensitive about their food additives. So
you're justifying why it makes sense for those countries, but nonetheless, we still have to have a response to them, right?
Yeah, but that's what I'm saying. On an individual basis, you can do that. So if you could say, like, if the Italians want to tariff us 500% on pasta, then we should do a tariff on something equivalent to them, not like
Right.
just do a broad one. That's the problem. So right now we're doing broad scale tariffs without trying to adjust for individual things that are there. And also some of the things that we should be applying more European like standards on food safety and health. I mean, that's the whole part of the other side of the equation, which is the Maha movement, which is Make America Healthy Again. Clearly, we see all the American products have all this extra junk in them, and then you wonder why other countries don't want to buy U.S. stuff. Come on, is it really that hard to imagine?
So I think you're right, because the market essentially was thinking that there would be very targeted sector specific tariffs, which they were ready to price in, or that they had already priced in. But I agree, the broad 34% against China, I don't think they expected that.
Yeah, I mean, you also have to remember a lot of these countries, they're democracies also, which means that they have to answer to a population themselves. So if right now you said, you know what, let's take away all import tariffs on U.S. agricultural products into Denmark, there's Danish farmers that are going to lose their jobs. They're going to lose their farms, So you can't do that. You can't politically sustain that also. So there are countries that are going to try to protect their domestic manufacturing bases. They're also going to try to protect their domestic agricultural bases. And I think what it is with global trade, you have to try to, work with people to basically get the best deals for your country, where you produce something at a high quality, at a low cost, and you're able to sell it to them at a good profit, and they can do the same thing into our system,
Right. All right, let's get an update here on some. Kris, if you ever have to leave, let me know. But if you can stay, then we can react to some more of this stuff.
I can stay for a little bit, man. This market is crazy to see, but at the same time, it also my biggest thing right now is trying to understand how this will impact global markets, not a year from now, not 2 years from now, but 5, 10, 15 years from now, and see what structural changes can actually happen in the future, because that means that there's a lot of things that we as investors are going to have to adjust.
Yeah, we're going to have to make some adjustments. The S&P 500, a new low for 2025, folks. We are officially down 4% on the day.
Really a far more sweeping plan than really any investors, any analysts had been expecting, what you just described as the worst case scenario. At least a 10% tariff on nearly every country in the world, starting within days, and the rates only going higher from there. And there's really nowhere to escape the tariffs. Take a look here. 34% on China, 20% on the European Union. All of these numbers, by the way, added on top of any tariffs that were already in place. And then look at places where companies might like to move. 46% on Vietnam. It's not on this screen, but 49% on Cambodia as well. So really nowhere to go for safety here. By my count, guys, this is about 10 times the value of imports that will now face tariffs versus in the president's first term. It was about $380 billion then. Now it's nearly all our imports at $3.5 trillion or perhaps higher. So we'll have to see a lot of that impact. And Sarah, I know one of your biggest questions this week has been whether these are negotiable and what the White House is thinking from here. I can tell you, as far as this morning, what we're hearing from officials, the signal they're sending is that these are not negotiable. They are not looking to strike deals right now. White House Press Secretary Caroline Leavitt was just on CNN this morning saying the president is firm in his approach and that if countries had wanted to negotiate, they had 70 years to do it. A White House official also.
Yeah, so this seems like nonsense. It seems like absolute nonsense. Because yesterday at the press conference, she was like, oh, the president's phone is always open to listen to any calls. So like, this is why I think the market's also getting upset at the administration, because how do you go from the president's open to talk to anyone to this is not a negotiation, they had 70 years to negotiate? I think it's purely just rhetoric at this point.
I mean, my only saving grace in all of this is that we live in a democracy, and eventually the Republicans in the House and the Senate, they are going to make some phone calls. If the countries don't make phone calls, outside countries, internal politics is going to be making phone calls, because if this ends up persisting, you're going to see business leaders calling the Trump administration. You're going to see politicians calling, local governors calling the Trump administration and saying, look, what you're doing, you may think is right, but what you're essentially doing is going to hand the Democrats the House, the Senate in the midterms, and probably the presidency in 2028, and basically actually have a giant wipeout of Republicans. Okay. Like if you're talking about like what happened after the Smoot-Hawley Act, bro, the Republicans lost power for 60 years after that.
Mm.
Okay. So what you're doing right now is could end up tilting the scales in the favor of, an entire generation in the other direction, which you want to, which you kind of want to like have the country go into,
Yeah, I mean, look, people may say it's a stretch, but if there's a full-on recession, obviously, which I still think we're far away from, but if that happens, yeah, people end up just voting the opposite direction because of a protest vote to the administration.
I think a lot of people here that are like, oh, MAGA, I believe in Make America Great. Bro, I tell you right now, you're not going to be a MAGA person if you lose your job, okay? And it's the same thing with if you're a super liberal person. If you lose your job under a liberal president, you're going to go MAGA. That we saw that happen or in Barack Obama's term. We're going to see that happen here. If people end up losing their jobs, losing their investment portfolios, losing their retirements, I don't care how you lean socially. Economics is the ultimate decider on who you end up becoming. So a lot of people that are like, oh yeah, I believe in Make America Great Again. Trust me, if you lose your job, you're going to think twice.
No, I would agree.
Also told reporters yesterday that this is not a negotiation, it's a national emergency, and that cutting tariffs now is not enough. That ignores the decades of trade barriers that have been in place. I'll also leave you guys with just one final example. Israel is one country, obviously a very close U.S. ally, that cut all of its tariffs this week ahead of this announcement. They still saw a 17% reciprocal tariff put in place yesterday. So the biggest question from here is exactly how countries start to retaliate, and then whether the White House looks to strike any deals. But the posturing at this point is that they're just not open to it at this point. Guys?
That was what I was going to ask you, and I am surprised to hear it because a lot of these rates are very high. And I guess the question from here, Megan, is just what the pain threshold is for this administration. I know they say they're not watching the stock market, but we're down 4.75% right now on the NASDAQ. And the economy, like, okay, there's an adjustment. We could have a recession, but I'm not sure that they would want something deeper than that.
Yes. I think you're right. I'll have to head inside and see what network they're tuned into this morning in upper press. Sometimes that gives us a signal. They're going to say that they're not watching the markets. They've been saying consistently for weeks now that that's not what the president cares about. And of course, they did roll out this plan knowing full well that it was going to hit the markets, knowing that there was a lot of concern out there already. They didn't give too much time, too much lead time here. April 5th and April 9th are the two dates that these start to kick in. So will any come off before then? It doesn't look likely. There's not a lot of time. Maybe they take effect. We see even more fallout, and then there's a deal. That's what we have to see, is just how much pain they're willing to take.
Yeah, well, Megan, I think there's a lot of investors who hope and expect there will be some deals. I think it's very interesting. Your reporting indicating at least at this point, the posture is no. I did want to come to Canada and Mexico if I can. Obviously, as shocked as perhaps some are by China being at 54% now or Vietnam at 46%. Was there something, was there a surprise that Canada and Mexico didn't take anything more?
A little bit of a surprise, but I would also say that 25% is still really significant. So I think they decided here to just keep the status quo. The 25% fentanyl tariffs remain in place. The USMCA compliant goods continue to remain exempt. So it is also interesting that of all the trade deals that the U.S. has, we have them with South Korea, for example, with Colombia and South American nations. All of those are sort of thrown by the wayside, except for the president's own trade deal, the USMCA, they're continuing to abide by allowing those exemptions to remain in place. There is some text within the executive order that says if the president ever decides to remove the fentanyl tariffs at the reciprocal level for those two countries will be just 12%. So I think the White House actually decided, by reading between the lines there, that the 25% was the more aggressive move, that a reciprocal rate would only be 12, about half that. So they kept the higher rate in place while saying we still need to see more on fentanyl and maybe on any number of issues that they're negotiating bilaterally.
Megan, I got another question, on chips. We were talking to Jim this morning, semiconductor chips, just trying to understand what has been potentially exempted. Can you go through some of that? Is NVIDIA, for example, and the semiconductor chips that are manufactured in Taiwan not going to be subject to those tariffs?
That's absolutely right. There are just a few key items. It's pharmaceuticals, semiconductors, copper and lumber. Gold is on that list, energy and some minerals as well. All of those exempt from these tariffs. But I will caution that's for the moment. A White House official told reporters yesterday that the reason those goods are exempt is because the president is looking at issuing some sector-specific tariffs on them. So copper and lumber are already under a national security investigation. They told us that they expect that to wrap up fairly soon. So there could be a separate sort of tariff on copper and lumber. Pharmaceuticals and semiconductors not currently under investigation, so it might just take a little bit longer. But they say the reason they're not getting hit with reciprocal tariffs is so that they can later do sector-specific tariffs. We'll have to see what exactly that number is. It's a reprieve for now, but it could be temporary.
Kris, is that the saving grace here, that they're eventually going to do sector-specific tariffs and these countrywide tariffs are going to go away?
I don't know, dude. like I said, I don't know. It could be something like 70%. You don't know. You know, this is the challenge. You don't know what this administration is going to do. Any predictability is gone. The one, and this is going to sound bad, but if the market reacts so poorly, that could end up being a good sign, because that means that we're getting away from everything very quickly, and that means that we have like a nice long runway up. You know, the question is, where's the bottom? And no one really knows right now.
No, but that's a good point. Like we're down from 6,100 to 5,400. Let's say we bottom out at, I don't know,
4,800.
Okay, it's okay. I'm thinking 52. You're going way too. But like, yeah, there's a big room up from 48. But like, that's a lot of pain down too.
Yeah, but I mean, this is this is one of those tragedies that we're just facing. My brother called me this morning and he's like, "Should I sell everything?" And I'm like, "No, just weather the storm." He's like, "Okay." He's still gonna probably sell some stuff because he's less of a risk taker than I am. I'm right now shopping for opportunities outside the country that, like, here's an example, like Nubank. What does Nubank have to do with tariffs? They're completely isolated in Mexico and Brazil. So yeah, if Mexican and Brazilian economies slow down a little bit, they're more likely to face a little bit of a challenge. But at the same time, the Dixie is drying up right now, which means that if you look at the Brazilian real versus the USD, the Brazilian real has been going up, USD has been going down, meaning their earnings are going to look strong next year.
Right.
Well, not even next year, this year, as you adjust for the earnings. So the earnings showed the other thing around because the dollar was strong and they report in dollars. So, there's value opportunities there. Energy is also another sector that I'm keeping my eye on. Like I said, Venture Global is my super long-term bet that I think is going to be the place that I really want to be.
But there's no safety for you in this market.
I mean, cash is pretty safe, right? You're still getting a 4.5-5% return on the money, and you're basically getting, that's what Papa Buffett is doing. So you're following in the footsteps of Papa Buffett.
Yeah. All right, let's finish up this final piece of Lutnick. I think it's like 4 minutes left, and then we'll be done with him.
We can't sell corn. We can't sell beef. We can't sell cars because the rules are stacked against us. And I think it's interesting. It's time to change the rules and make the rules be stacked fairly with the United States of America. We need to stop supporting the rest of the world and start supporting American workers.
Let's take for instance, Australia, for instance, hit with a 10% tariff. They don't accept beef imports from the United States. That goes back to when they thought mad cow was going to be imported with some of those things. If they were to start taking American beef imports, would that be something that would get them an exemption? And how quickly do you think that could happen?
I don't think the word exemption is going to be a factor. I don't think that's such a thing. I think what there's going to be is a world of fairness. Let's go try to figure out ways for the world to treat us more fairly and more properly. I don't think it's effective for the world to retaliate. I mean, those things are silly. We are the consumer of the world, right? We buy $20 trillion worth of goods, and we are basically the buyer of everybody else's in the world's items. So what is the point of them going higher? so that we go higher? I mean, come on, look, he gave a 50% discount. What he's saying is, look, we need to rebuild American manufacturing base. We can't allow the United States of America to not produce steel. We can't allow the United States of America not to produce pharmaceuticals. We can't have a war where we can't get antibiotics and we have to call another country to make a missile or to make a plane. I mean, these are obvious things. We need to have domestic production. We need to employ Americans. And I think that is the model that Donald Trump is seizing on. We need to employ Americans for the good of the United States of America. Factories are coming back. And here's the key. Factories now can use robotics. And so American workers can be much more efficient with robotics. You're going to see the greatest surge in training for what we call trade craft, teaching people how to be robotics mechanics, engineers and electricians for high-tech factories, HVAC. You think about your air conditioning system. No. When you build one of these great factories like an Apple factory, they use air conditioning to cool it. That is really high-tech. It's a great paying job, and it requires a high school education and training, and our Americans are ready for it. And you're going to see the greatest resurgence of factory building and factory production in America. This is our time, and it is time for us to rebuild it. And that's what Donald Trump is out to do. He's changing the way people think about production in America. It's time to stop exporting and time to stop taking all our factories and letting the rest of the world have them. It's time to bring them home.
Along with that, there sometimes are some unintended consequences. And if it's the biggest reset of the economy, U.S. and global economy since World War II, Howard, the stock market's one thing, and I can understand, we had 20% gains the last couple of years, and it's done well. But there's other markets in a world order to think about in terms of currency moves and bond yields. And it does matter because we're interconnected. So I'm going to paint you a story just quickly. The dollar has declined significantly since the president came into office. What if that became disorderly? And I mean, Europeans have already lost a lot of money in the stock market, and even more with the euro appreciating. What if they got to the point where interest rates suddenly had to spike? The dollar started to go into free fall. Investment capital no longer came into the United States like it has been. Because there's a fundamental shift in the world order in terms of currency. Is there a Trump put there? Maybe there's not a Trump put on the stock market, but what about on a collapsing dollar?
It just can't happen. I mean, if you think about it, the United States is a $29 trillion economy, and we are the consumer of $20 trillion of goods. Other countries are producers of goods, and we are the buyer of goods. So if you want to build your product.
What about services, Lutnick, you fucking moron?
If you want to avoid.
Go ahead. What's
what about services? We're a fucking services economy, you fucking moron. Like, what part of that doesn't he get? Like, I fail to see that this guy being one of the, supposedly a very smart person, constantly going about goods, but completely ignoring the services side of the equation. There's a reason why we're only at 5% employment, because 70% of the fucking workforce works in services, higher margin services. Come on.
Yeah, it seems like paradigmatically they want a lot of manufacturing when that's just like the U.S. economy has evolved past manufacturing, and I guess they want to bring it back.
These tariffs, or these countries have to fundamentally alter the way they do their business. Those two things going together are going to result in interest rates in the United States of America being much, much lower, high quality production jobs much, much higher, domestic production of huge amounts of factories. That's GDP, right? Remember, when Donald Trump says we've got $5 trillion of factories coming to America, think of 5 trillion divided by his 4 years. That is huge GDP growth on factory building, which all of you are not yet thinking about. These factory commitments are going to create huge growth in America.
Mr. Secretary, that's the big question I wanted to ask you about factory commitments. And one of the things that I was speaking to a whole number of CEOs yesterday who need to actually make some decisions. And the question is, how soon do they make those decisions? And they talk about what they think of as this game of chicken, a almost political game, which is to say they don't know whether these tariffs, which are being announced today, are going to be the same in a month, 2 months, 6 months, and more importantly, in 4 or 5 years, when in fact the factories that they would have to invest in today would be up and running. What do you say to that CEO who says, you know what, I'm actually going to I'll take a flyer and I'll wait a year or two, see how this all plays out before I do anything, which also means that we're going to have a real freeze in terms of investment?
I think you're going to see, and we've been feeling it every day, that you're going to build in America, that this is a reordering of global trade, and it's really thoughtful. If you understood how rough these other countries are on American products, rough, and their tariffs are just like the tip of the iceberg. The classic, the rest of the iceberg below the water is so rough and so difficult, and they have subsidies and they have trade barriers, and you can't sell because if you lean 1 inch to the right or 1 inch to the left, oh, you're not allowed to sell. I mean, I tell the story, we made a deal in 2012 to take Korean cars. In exchange, they were going to take our produce and agriculture. And when McDonald's tried to bring in French fries, they actually said, we can't bring in the French fry. The American company can't bring in the French fries because we couldn't prove the origin of the potato. I am telling you, the rules of the world are so stacked against us that we are just the consumer of the world, and it's going to end. And once that ends, and once America wakes up to it, and now all of America is going to wake up to it, that everybody is going to build their factories here. Everybody's going to move their factories here. And America is going to become the producer of much, much more of what we consume. There will become a balance. Interest rates will be much, much lower. The United States of America will be much, much stronger. We are growing much too much like the rest of the world. Our growth rate should be double or triple them because we are the greatest economy and we are feeding the world. And Donald Trump would like to have America first. How about we feed America first? We start building these factories. You're going to start to see GDP, domestic production go up. We talk about buying foreign cars. That's consumption. That's not domestic production. We're going to start to see domestic production dramatically rise, and that's what Donald Trump is focused on.
Kris, your reaction to that final take by him?
I think people are going to get fired at Palantir, and they're going to have to work on making U.S. socks. I think I saw that in the comment section. Like, you know what? We don't need to get educated. We don't need to do research and development. We don't need all that stuff. We need to all be working in factories. You know, let's go produce stuff. You know, the Jesus, man. I don't even think this guy believes in what he's saying. And if he does believe in what he's saying, then he's even more far gone than I originally thought. Whatever. You know what? What can we do other than just leave it to the markets to basically remind these people what they're doing is stupid, you know? And I think that's one of the great things about capital markets. Capital markets have a way of punishing you when you don't do the right thing, you know? And right now the US is not doing the right thing. The capital markets are punishing it via the stock market and saying, you know what? We don't believe in what you're saying. Sorry, boom, pull capital. And as capital pulls out, people lose money. People lose money. They vote a different way, you know, and eventually things self-correct.
All right, Kris, thank you for your analysis today. I really appreciate you being here for 2 hours. It means a lot.
One thing I just have to say about this administration. I know that I keep trying to, in my head, I'm trying to justify the moves thinking like, oh, this is like some 4D chess. Okay. As time is going on, I'm starting to realize this is not 4D chess. This is just people shooting from the hip, jockeying for influence internally within the Trump cabinet for how to do things. I mean, if you think about it, this is this has been one of the worst starts to any administration. Okay. Like you're seeing some of the greatest companies that this country has ever produced trading literally double digits down today.
Yeah.
That isn't an indication as to how roughshod you guys are doing things, both on a policy side. Then you really need to reevaluate things. Okay. And I'll just quote something that Donald Trump himself has said. If the Dow drops by $1,000, 1,000 points in one day, that person should be immediately removed. Guess what? We've seen multiple days where that's happened in this administration in the last 90 days. And that's his quote. Okay. So what does that tell you?
Yeah, I am still optimistic that there will be a way we navigate these tariffs and that ultimately they are negotiable. But as of today, the market's saying we don't believe it. And the market, quite frankly, doesn't have I know people are mad the market's down. You can't blame the market on this. I mean, they are reacting to the level of nonsense we got yesterday in terms of that trade policy. And they're going to go down as a result of it. And maybe things get better when things get fixed from a negotiations perspective, as the administration has kept saying. But if they don't get fixed, you're right. Markets will continue to show punishment towards these policies.
What's sad is that I think this actually gives the other side more leverage to say, look, your capital markets are burning down.
Yeah.
Right. And if they keep burning down, you think the Europeans, the Chinese, they're going to you know what? The US wants to let this happen. Let them simmer on it. Let their markets go down, because internally there's going to be a sea change. Okay. I'm telling you, the midterms, when they come, if the Senate and the House, the Democrats take super majorities in those, dude, that is going to leave the Trump administration in the worst spot possible. Okay. Because at that point, all legislation will literally go through them, and then they'll be able, and especially if they get a super majority, they'll be able to override vetoes. All right.
Yeah.
So
Yeah.
I think we might be heading into something like that if the economy does not get into a point where we're in somewhat of a better glide path. And I still like you hold out hope that the administration is only playing chicken and not working to eventually get to the other side of this, you know.
I agree. Thank you, Kris. We really appreciate it. Kris's Twitter right here in the chat. I'm sure we'll be talking more later this week. All right. Thank you, Kris. Bye.
Later.
All right, folks. Yeah, it's a nasty market, as you can see right here. Amazon, bro, down 9% on the day. Apple down 9% as well. Nvidia's down 5%. Microsoft, Google, Meta down about 4 to 5. Amazon and Apple really getting hit. Tesla down 6. Tesla goes down 6 or up 6 every other day, so that one's not as crazy. But the other Mag 7s that tend not to be as volatile as a Tesla or an Nvidia, they're getting smacked today. They're getting smacked bad. Berkshire Hathaway's down 1%. JP Morgan's down. Financials are down. Consumer defensives are up. Some of healthcare is up. A little bit of pharmaceuticals are up, but telecom services are up, but pretty much everything else is red across the board. Obviously, technology being one of the biggest ones that's getting hit. Who's buying? Are we buying anything? Put in the chat if you've bought anything. I mean, I know it hurts to buy on a day like this, but then again, these are the days where you tend to take a little bit of a nibble, even if it's a small one. Put in the chat if you are buying anything. I have not looked at my portfolio yet. I'm going to pull it up right now. All right, we're down $25,886.39. It's a little red for sure. Things were down a little bit more about 40 minutes ago, so we have bounced from some of those lows, but we're very close. Like Nvidia was at 103.5 or at 104. I mean, it's not like it's at 106, 107 or has escaped away from it. Those Palantir puts, by the way, that we talked about yesterday, the April 25th ones, they had about 200,000 of them open. Today, the volume on those puts, $60 April 25th, is 20,000. There are now 235,000 of those open. I don't know, dude. It's weird. We've never seen that type of put premium across a certain strike and date on Palantir, at least not in the past couple months, but either someone or some hedge fund is making a pretty big bet that Palantir will see that $60 range. I mean, Palantir's holding up kind of nicely, dude. It's like you'd expect on a day like this, we'd be well into the 70s. We're at 83.50. It's down 5%, but I mean, I would say one of the most resilient stocks of 2025, given the extended multiple that we all know Palantir is trading at, is Palantir. I mean, for them to be able to still hold this level, obviously could go lower, but on a day like this, holding 83 is not that bad. Down about 4% on the day. We'll see if that can maintain momentum, but not as bad as some of these other names. Amazon right here down 9%. Nubank down 3%. There you go. New low on the S&P. We are now down more than 4%, 4.02%, 541 on the day. It looks like it wants to go down below 540. But we are just hitting a new 2025 low. Newsmax down 20%. That makes sense. This one, very overvalued IPO. That's at 43. Grab, which I believe also doesn't have to deal with the issues of tariffs to the same extent. That one's down 9% on the day. Same thing with Nubank, down 4%. I mean, there really is no safety other than cash. Silver should be up today. I mean, like you would think, well, it's not up because it's not following gold, but the fact that hedging assets like silver and gold aren't getting any love today means that people really are just going into cash. And I mean, if they're going into cash, they're probably going into cash out of a lot of fear that they're currently having right now. I see a lot of people saying they're taking a little bit of a bet on Nvidia, Hood. We got some Googles in the chat, Amazons. David said he bought Grab, Hood, and Hims. Where's Hims? Are we below 25 on that? I think we're below 25. We are 20. No, that's good. I mean, look, it's down 7%, but like the worst of the worst, like cataclysmic types of prices that I'm thinking of have not been hit yet on a lot of names, even though Amazon and Apple, definitely we haven't seen these prices in a long time. But still, obviously, they're down a chunk. Marek bought Roku and Trade Desk. Amazon did put a bid on TikTok, but we have no confirmation on if Amazon's going to be buying TikTok. OnlyFans, yes, you heard me correctly. OnlyFans put a bid on TikTok as well yesterday. We thought Trump would talk about TikTok at the press conference, but he didn't. So it's still up in the air in terms of what's going to happen to TikTok. But they're going to have to give us an answer in like 2 days because the deadline is April 5th on the extension of the ban. Sanjay says Grab just got its street hailing license in Singapore, a matter of time before they eat other legacy cap companies' lunch. Yeah, we talked about that yesterday. Grab is the 6th company in Singapore to get that street hailing license, which to me is actually a signal that they're working with the regulators and they're becoming very friendly with the regulators. So maybe the GoTo acquisition actually ends up happening if they're willing to give them the street license, which they've been rejected for 5 or 6 times before. So there's a lot of good catalysts for Grab. There's a lot of good news for Grab. Grab is having the first product event on April 8th. I'll be live at 10 p.m. Eastern to stream it. I don't think it deserves to be at 420. I don't think a lot of these stocks deserve some of these levels. But again, I can't blame the market for taking it there as well. Clorox is green on the day. For those that were on the market close, Steve joined the show and he brought up the fact that Clorox is trading at a more expensive multiple than Google. Clorox is green today. Google is red today. And part of the reason may be because the market truly does feel Clorox is recession-proof versus Google's multiple. But paying the level that you're paying for Clorox, which is 19 times versus Google at 15 times, is interesting, to say the least. It is pretty damn interesting. SoFi right there, down 11% and below $11 as well. Where is the 10-year? 10-year is very close to going below 4.019. 4.019. Very close to going below it, but it is not officially there yet. I think the French president just said something. And then I want to talk about NVIDIA because we got a downgrade on that as well. Macron just said, I urge all companies to pause U.S. investments. Okay. So you got the French president saying that all France companies should pause their investments in the United States. By the way, China said the same thing last night. China specifically said, China has vowed to retaliate against the U.S. after being hit with Trump's tariffs. The new tariffs will bring average U.S. tariffs on all Chinese products to as high as 65%, which could reduce China's GDP growth. China has condemned the U.S. levies and pledged to hit back with unspecified measures, while economists expect the Chinese government to add stimulus to the domestic economy. China has also said we are vowing countermeasures based on these Trump tariffs as well. Again, either of these countries are trying to act like the big dog after Trump unveiled his big dog policies, and it's just going to go back and forth, or eventually there will be some capitulation, which I imagine, I'm kind of in line with Dan Ives here. Like, you have to imagine there is some level of negotiation here and that these rates don't stay the same. Because if you don't, then yeah, it's a recession. I mean, like, if we get inflation up to 5% like UBS is projecting, which with tariffs, it's not going to be as transitory as Jay Powell's saying if tariffs are going to last for a long time. Definitely if they last for the next 4 years, we're going to have some issues. We're going to have a lot of issues, and you're going to have to imagine some level of negotiation by the White House happens to deal with it. HSBC downgrades NVIDIA to hold from buy, lowers their price target to 120 from 175. This is the first major downgrade I've seen on NVIDIA by a bank that has had a pretty high target on them, 175 to 120. Pretty aggressive. Here's what they have to say. Less GPU pricing power going forward is likely to cap earnings upside momentum. We first upgraded NVIDIA to a buy in April of 2023 on the back of NVIDIA's strong AI GPU pricing power and product mix being underestimated by the market that we believe has continued for the past 2 years. However, we now think NVIDIA's GPU pricing power is slowing down as we have seen no significant average selling price boost between B200 and B300. We also see limited spec migration outside of the adoption of the HBM4 memory with NVIDIA's upcoming Vera Rubin, which does not see any change in GPU headcount versus Blackwell, remaining at 72 GPUs per rack until Rubin Ultra in calendar year 2027. Okay, I don't know if I would fully buy into this. There's a lot of other really smart analysts that look at NVIDIA and they have the opposite take. They have a completely different perspective on the next generation models coming after Blackwell. Downgrading from 175 to 120 the day we get hit with all these tariffs feels a little odd. Like unless they found out some unique form of research overnight that caused them to create this downgrade, they should have had this downgrade months ago, right? Or at least weeks ago or days ago. But doing it on a day like this is kind of telling for kind of where sentiment is. I'm not sure if HSBC will be right about that. Obviously, time will tell, but there are definitely counter arguments to their analysis around GPU architecture and what that means for NVIDIA's earnings growth. Where is Amazon? Are we down 10%? Amazon, wow, 9.4. All right, 177, new low for 2025 on Amazon. Last time we saw 177 was closer to August of 2024. So we are really getting hit right here. Yeah, RH, Restoration Hardware, they also got hit pretty badly. They're down 40% on the day. Meet Kevin actually posted this clip yesterday that I'll play right here where the CEO in real time is looking at his stock on their earnings call. And it was kind of crazy because he reacted to the stock being down negatively as the Trump conference was going on.
Can't make this stuff up.
So yeah, like we're just really well positioned right now. I think that's the headline. Like, if you're going to bet on somebody in this race, and I don't know, where's our stock now? I mean, I guess the stock went down, based on some of the numbers we reported, and then it got killed because of oh really? Oh shit. Okay. I just looked at the screen. I hadn't looked at it.
I mean, even CEOs, right? They're looking at their screen and they're like, "Oh shit!" Like that's that's an aggressive stock downward move, and it's because of these tariffs. Palantir right here down 5%, Oxy down 8%. The cruise lines are getting hit pretty badly as well. Royal Caribbean down 10%, CCL down 13%. I think the market is I mean, it's obviously pricing in a lack of demand for cruises, aka consumer confidence going down, aka a pseudo recession. I mean, down 13% on a cruise line means that the market thinks cruises are not going to be as high in demand. I mean, like because cruise lines in particular, I don't think are necessarily affected literally by tariffs, but obviously if tariffs decrease purchasing power, decrease income, yada yada, make the cost of goods go higher, people might not want to take a trip to the Bahamas. And that's why you're seeing down 30%. Now, this is at odds with what Carnival Cruise said last week. They said, we're going to have the best year ever in the history of being a company. Next quarter, when we get their guidance, it's going to be interesting if that energy is the same or if they adjust to the reality of some of these tariffs. NVIDIA below 103. Oh, boy. There she goes. 102.85. 102.85 on NVIDIA. Okay, I'm buying 5 shares. I'm buying 5 shares right now. Buying 5 shares, very small. It's probably going to go lower. I'm buying 5 shares. Haven't seen these levels in a while. It's definitely going below 100. Look at this thing. Oh my gosh. All right, I bought 5 shares. I bought 5 shares. Very small buy, just to get in there. This thing's going below 100, bro. This is going below 100. That's what it feels like, but this is what it means to DCA. You can never time it. So you just take a little stab at it. Wow, 102.5. All right. Give us below 100. Give us below 100. Let's see. So NVIDIA's at 105 or 102. Then everything else should be just, yeah, S&P 50 cents away from below 540. Apple, $3 away from below 200. Tesla is still up. I mean, Tesla's still doing pretty damn well look, Tesla was 215 on March 13th. It's at 260. I think if you're heavy into Tesla, you really can't be that upset. Like, unless you bought it at 487, you've got to be a bit more impressed with how Tesla's holding up. And Tesla does not have the earnings growth that NVIDIA has. Not anywhere near what NVIDIA has. So the fact that Tesla's holding up is quite incredible. Nike right here down 12%. Shopify just demolished 18% on the day. It's getting hit. It's getting hit. Fear and greed, we are at 11. That's the lowest levels that we've had. Yeah, 11 all year. This is definitely worse than 2024 August because I think we maxed out at like 17 on fear and greed there. We saw 10. Yeah, well, there you go. 10, 11. That's what we got right now. Look, I mean, this is definitely a market where, yeah, the reason I only bought 5 shares is because like it's probably going lower, and you don't want to ever take all your remaining capital and buy a dip immediately. But also, what if it doesn't go lower, right? What if 102 actually is the bottom for NVIDIA? Like, no one really knows. As much as we try to pontificate about this, no one knows. Amazon at 177. I don't have a big Amazon position. I would love to start building that up. My conviction on NVIDIA is a bit more deeper than it is on Amazon. That's why I'm not taking a stab at this. But if you're heavy in Amazon, stocks down 10, 15% in a day, you tend to take a nibble at it because you don't know if it's going to go down another 15% or if it's going to go down another 2% or if that truly is where some of the pain is going to stop. So I don't blame anyone for buying the dip here. I don't blame anyone for staying in cash. And I also don't blame people for selling. Not saying that I think selling is the best option here and going straight into cash. However, based on the level of uncertainty the Trump administration put forth yesterday, yeah, I can't blame you if you say, hey, I just don't want to be in this market right now. Granted, I do think the time to sell was a month ago. I don't think it's at these levels. I mean, you got to really think NVIDIA is going to like 70 or 80 to sell at 102 if you bought in at like 115, right? At that point, it just makes more sense to go down with the ship. But if you do feel like NVIDIA is going to collapse another 30% from here and the market's going to collapse another 10, 15%, then maybe selling is the right choice. But at that point, you've kind of got to evaluate what actually is the personal exposure that you have to this market. And I think for a lot of us that have been in for the past couple of years that have benefited a lot from 2 bull years, we are still up pretty decently from the lows of 2022. So now it's a question of how much you want to protect that capital versus risk it in this current environment. NASDAQ is down 1,000 points. That is correct. NASDAQ is down 1,000 points. Wow, 5.66% on the NASDAQ. The Qs, there you go, down about 4.9%. It's red. It's absolutely red. Where's the spec names? Where's like Archer? Archer is down. See, even these, I thought they would be down like 20, 25%. 6% is like not that crazy for some of these spec names, which is interesting. Like you would just expect them to get hit. Where's Quantum today? Let's see Quantum. Quantum, all right, about 5 to 7% across the board. That's expected, but then again, these guys go down 5 to 7% every other day. So it's not like a 20, 30% bloodbath there. Archer's down 6, MicroStrategy's down 7, Faraday Future down 6, Soundhound down 5, Oklo down 4. I think, one thing is obvious. Buying a company that has no earnings is pretty tough right now because in this environment, you need some level of earnings growth. And that's not what we're seeing. GameStop right here down 5.86% as well. The NASDAQ is now 1.3% away from a circuit breaker triggering. This would pause trading for 15 minutes if the drop occurs before 3:25 p.m. We have not had a circuit breaker all year. Did we have a circuit breaker during August 5th? I don't think we did. I think the last circuit breaker was 2022. Maybe I'm wrong, but maybe we did have it in but if we did have it in August 5th, then it was a really small one. Yeah, we didn't, right? Yeah, we didn't. So if we do get a circuit breaker, we would have the pause of trading. I remember during COVID, we had a bunch of those. And basically a circuit breaker temporarily halts trading activity when there's extreme volatility. And so basically it's when the market says, okay, enough is enough. Like we've had like more than enough pain that capital markets can handle. We're going to pause trading for a bit and let stuff chill out before people come back. And it's almost like when a stock ticker gets halted because it either goes up 50% or down 50%. That would be the equivalent to the entire market taking a break. And in COVID, we had that many times, many times, because things were really disgusting getting into that March 2020 timeframe. But we did not have it in 2024. It would be pretty interesting if we end up getting it today. VIX is still below 30. That's correct. Wayfair down 28%. Another company with a lot of physical goods across the entire world that will be tariffed. So those companies uniquely are getting hit today. Okay, let's ask a poll right here in the chat. Do you think this is an overreaction or not? Do you think this market movement is overreacting? Overreacting meaning, look, we should be red, but we shouldn't be this red. That's what I would define overreacting as. Amazon right there, down 9%. Let's get another update from CNBC on some of these tariffs, and then we'll keep going from there.
Was all the ways that they're ripping us off, whether it's currencies or taxes or tariffs. The problem with that is that assumes that we will have balanced trade as long as they're not cheating us, which doesn't make any sense. It doesn't make sense because we don't produce coffee in this country. We don't grow bananas in this country. There's economic theory where things are made overseas and we buy them overseas. It also, and just to get a little bit more wonky in terms of the economics of this, assumes that every 1% tariff rate is a 1% hit to the deficit, which it absolutely does not work that way at all. So the premise is flawed, and I definitely think that has to be feeding in here as to, first of all, how do you negotiate that away? I don't know. You have to try to get to a trade surplus with the United States. You can't just take off tariffs.
It's not based on what many would say is intellectual rigor that you anticipated would be at least trying to truly understand what is the actual tariff.
Yes.
And therefore, what is a reciprocal response from the United States, in part designed to either equal it or have it reduced on the other side.
51% of you say no, the market is not overreacting. 49% of you say yes. So about 50-50. Here's the China update on tariffs.
Is now responding to the president's tariff announcement. Let's get to Eunice Yoon in Beijing. Hi, Eunice.
Hey, the effective tariff rate, as you guys were talking about with China, is actually around 70%. So this is how it all stacks up. After President Trump had taken office, he hit China with 2 rounds of 10% tariffs. That was to pressure China on fentanyl. Now we have this 34%, and it reflects the universal baseline of 10% plus 24%, which is specific to China. So that 10% goes into effect on April 5th, and then the higher one on April 9th. So these tariffs come on top of the tariffs that President Trump had put in place during his first term. So those range from 10 to 25%. And then separately to that, President Trump had announced that he was going to close a trade loophole that has benefited Chinese e-retailers such as Shein and Temu. So they have been able to send a lot of goods duty-free that way. China today announced that it is going to take resolute countermeasures. Those are their words. And based on what we've seen with the previous 2 rounds, the expectation is that not only are they going to hit back with counter tariffs, but also with an expanded retaliation toolbox. So this includes potential export controls for more critical minerals, as well as punishing individual American companies. Macquarie expects that Beijing is going to go that route when it comes to pushing a broader effort, which is to support Chinese suppliers to push the cost of the tariffs onto their U.S. customers. If you guys remember, Walmart executives were summoned by Beijing and chastised for putting more pressure onto Chinese suppliers. And then one of the other big talking points here is whether or not Beijing is going to make a larger than expected devaluation of the renminbi in order to try to help some of these Chinese exporters. But at the end of the day, still very unclear if China will be able to do enough to really offset a 70% tariff.
And China's economy is in the gutter, and they know it's in the gutter. So this is why I keep going back to the logical thing will be some type of capitulation by both sides, because the U.S. can't really afford to put 70% tariffs on China, but neither will China be able to handle those. So that's when two sides come to the negotiation table and say, hey, let's settle out a deal. It's just a question of when or if that is going to end up happening. NVIDIA right here, 102.95. The S&P did get below 540 for a second. We got, 539.98 for a second, for a millisecond, and then we bounced up back to 540. But we did hit below 540 here today. You are absolved of your cap gains tax. Dude, the thing is, again, the Robinhood options that I sold in January, again, those were multi-six figures. So capital gains is still going to hit heavy in 2025 or 2026. I just finished paying the 2024 ones. So and that's also what's helped my year to date, is just because there was a big profit taking event in January. But still, I mean, even with that, it has been an absolutely ugly, ugly year. And I mean, if this continues till the end of the year, I'm definitely not going to be paying as much capital gains as I thought I'd be paying. There's definitely going to be some losses to hedge against that, if you choose to sell, right? So that's another thing. It's like, I mean, I don't have any plans to sell NVIDIA, so I don't really want to take a loss against that. But if it's ugly by the end of the year, you might have some other people strategically saying, all right, I'm just going to sell some of these stocks and try to hit back against the gains I got from 2024. Mexico president says we will sign a new trade agreement with the European Union and work to further diversify our trade to other ex-U.S. partners. All right, so Mexico saying, hey, screw you. We are going to be working with everyone else now, and we are going to continue basically isolating ourselves from the United States. We talked about this on Monday when Japan, South Korea, and China started working together. China is now working with Canada more. I mean, China is also having some agreements with the EU. They're actually going to talk, China, the EU, and Mexico over the coming weeks. That was reported yesterday. And now the Mexico president saying right here, we're going to work with the EU and other ex-US partners to diversify our trade. I mean, look, either Mexico right here is just, again, trying to act like the big dog and be like, hey, we don't need you guys. We can work with other people. When in reality, there's no way in hell they actually have meaningful relationships they can pursue with other partners outside of the United States, and they're going to come crying back to us. I think that's what Lutnick's essentially dream is, that these guys are bluffing and they're going to have to come back to us and negotiate. But if they do end up making some deals that are productive and not with the United States, I don't know. I feel like it's a stretch to say there's a whole new world order. This kind of Ray Dalio's thesis has been his thesis for the past couple of years, which is that the United States is an empire and that empire eventually falls, like all empire falls, and you have other empires that take power away from the existing empire. I don't think it goes that far, but that's obviously some of the analysis people will think if we truly do isolate our biggest partners. Have you said thank you once? Have you guys seen the meme about saying thank you? Have you guys seen this meme? Like, this is actually one of the funniest memes that is out there. It's referencing when JD Vance was telling Zelensky, like, have you said thank you for all the aid we're sending you? And people are now just putting JD Vance on top of like the stock market with all the red in the background, and they're like, have you said thank you? It's pretty damn hilarious, dude. Because now everyone's just like, well, you should be thanking the Trump administration if this is what you voted for. Doug says, Amit, there's no new world order. Other nations can't big dog us. The United States guarantees freedom for the seas, for the world. China can't do it. Russia can't do it. Europe can't do it. Yeah. Look, I philosophically agree with that. The reason we have so many allies is because contrary to popular belief, or what people may think is becoming popular beliefs, Western values are good. Freedom of religion is good. Freedom of speech is good. Being able to drive, even if you're a woman, is a good thing. So the idea that there will be another behemoth or another hegemony, which is just a fancy word for saying something that has a lot of power, that can export and impose those values, aka Western values, that in my opinion are objectively good, is unbelievable. There's no other country in the world that could actually withhold or uphold those values to the extent the United States does. But obviously, if we isolate everybody, there's an argument for just like, where does this trajectory lead us? S&P wants to go below 540, but it's not. There it is, 539. It touched it again. It looks like it just wants to break below. It's not doing that yet. We are down 24 points on the S&P 500, down 4.35%. I think this is one of the worst days we've had in about 2 years. Maybe the last time we've had this type of a day was 2023. I don't think we had a 4% on maybe September 2024. We had a 4% day. Yeah, September 6th. That was that Friday after the jobs data. I remember because I was at AIPCon and I remember it was a nasty day, but we rebounded really quickly after that. I mean, like literally within a week, we recovered that 4% and then some. But it's been a while since we've had a 4% that's sustained to the downside. Amit, please tell us where the NASDAQ and the S&P will be a month from now. I obviously have no idea. But I can give somewhat of a framework to think about it, right? If there are tariff negotiations that end up getting pulled back, which I still believe are going to happen, I just don't think these tariffs are going to stay on the way they're positioned right now, then I think we're higher, because I simply think the market obviously is in pain right now, and the market will start to price in any level of good news that we can get if we get some good negotiations. And I think Trump wants to be seen as the savior who comes in and says, look, we had all these aggressive tariffs. I pressured them. I put them, I put their backs against the wall. And then ultimately I was able to negotiate this deal. And he's going to take a lot of credit for that. If that ends up playing out, then yeah, I don't think we're necessarily this low. But if we still have freaking 90% tariffs against Thailand a month from now, or sorry, 45%, because Thailand has 90% against us, then yeah, I don't know how the market decided to buy stocks. Like the level of uncertainty this has created is, I think, beyond our wildest imagination. Last S&P 500 close was September 2022. Last NASDAQ 5% close was September 2022. Thank you for that stat. That makes sense. That makes sense. So it's been about 2 years since we've had that ugly of a close on the day. Maybe we don't close down that much. Oh, wow. There you go. 539.6. Now she's actually going below 540. There you go. Bottom's falling out on the S&P. Same thing with the NASDAQ. 452 down 5%. S&P 500 down 4.34%. NVIDIA 102.2 down 7%. If the NASDAQ keeps falling, NVIDIA is headed below 100. Palantir, dude, Palantir's still holding up, bro. 82. Palantir's holding up. At least for now, it's holding 82. Google, $1 away from going below 150, and then Apple, $3 away from 200. And then Tesla, although it's down 7%, kind of holding up. I mean, the ones that are really going to get are Nike, Shopify, and Elf, because they have a ton of China exposure. Small caps as well, getting hit pretty badly. But the S&P trying to hold this 540 range. Ontology will save the day. I mean, yeah, dude, maybe Palantir just gets more demand now because companies need the ontology. Doug says this is all algos. I wouldn't disagree. I do think there's a level of probably retail panic that's going on right now. So I could definitely see people saying, hey, I need to sell because this is just too much. But the level of sell-off we're seeing on like Apple or Amazon, which are premier names, does feel definitely like the algos are getting in there and taking some pain off the table here. Oh my. I think another 0.7%, and then we get a circuit breaker on the NASDAQ. It is definitely pretty ugly. The European Union announces they are ready with countermeasures to President Trump's reciprocal tariffs. Yeah, I think a lot of these countries are going to come out and basically announce that they are ready to fight back. And they kind of have to, right? Like, I mean, this is essentially the name of the game, to try to make it seem like it's not as bad for them. But this is going to be pretty hard to deal with right here. Okay, we have here we go. Let's listen to this guy, former Treasury Secretary. This is the guy who was Trump 1.0. Bessent has his job right now, Mnuchin. Let's get his thoughts and see if he's defending this tariff stuff.
This morning, obviously, in our morning, we're all trying to make sense of the news. You heard Steve's, I assume you heard some of Steve's analysis. We've been making it as well, the sort of, some say the lack of intellectual rigor behind the numbers themselves, which really seem to just be whatever they wanted them to be in order to perhaps stop trade with certain countries and, I guess, create a manufacturing base in this country that is far larger. Do you think it's going to work?
Well, let me start off by saying the president's been clear in wanting to redo the trade agenda. And I think if you look at his economic plan, which is tax cuts, regulatory relief, trade, and energy, there's no question that the trade agenda is more aggressive than it had been in the past. I really break it into two pieces. One is the 10% across the board tariff, which, as I've commented on, that is a form of a consumption tax. I would suggest that they put that into the reconciliation bill and score it and use that money to pay down debt or fund tax relief. And I do think the market can adjust to a 10% tariff. It'll be partially adjusted in costs. It'll be partially adjusted in the currency. I think it's the larger tariffs that are called the reciprocal tariffs. I'm hopeful that those will be negotiated down, that those are tariffs that will bring people to the table and will negotiate them down. Now, for many businesses, it takes a while to move the manufacturing base. Apple's announced big investments in the U.S. That's going to take a while. I hope the president will consider giving people credits for those people who actually have made real commitments, not just announcements, but real commitments to build in the U.S., because there's a transition period here that needs to be adjusted to.
Yeah. Stephen, I'd love to, use your experience to get an answer to this. I mean, you are credited with navigating the Trump administration during your 4 years as Treasury Secretary extremely well. One of those people perhaps that pushed back on certain instincts that President Trump had during the first administration. Do you think that there is going to be a willingness to negotiate here? Or is this simply a reflection of what the president perhaps wanted to do in his first term when you were Treasury Secretary?
Well, the fact that they've characterized it as there's a baseline tariff and there's a reciprocal tariff, I hope that is that they're broadcasting they want to negotiate, and that on the reciprocal portion of this, they want to lower trade barriers and other items. And if we put aside how it was calculated and we just say these are very high tariffs, I do hope there's the ability to negotiate them down, because as we've seen for certain businesses, it is going to take a long time to move that manufacturing base. And we've seen the stock market, particularly in certain stocks, react pretty negatively.
Right. I mean, I don't think we can put aside the way they were calculated, though. If we're talking about negotiating them down, David was kind when he said they lack intellectual rigor. They're not facts, right?
And again, I'm just looking at this morning. I believe they were calculated on a mathematical basis.
Yeah, no, they divided the deficit by the imports from that country, right, and decided that that number was equivalent to all the ways that the countries are cheating us, which is not true.
Well, they've made a conclusion that the market is efficient, and if there is a trade deficit. But again, I wouldn't focus on the way they've calculated it. I would focus on the numbers are quite high, particularly when you add up the existing tariffs on China and others, and in places like Vietnam. And I think that hopefully this will be a negotiation of let's get to the table, let's negotiate fair deals. I mean, I think as we've talked about on China for a long time, the tariffs were the only thing that got China to the table to negotiate. And there's no question that China's market has been closed to us for a long time, and our market's open to them. And if we could rebalance that and we could create an opportunity for U.S. companies to do business in China with a growing middle class, that's a big opportunity. So if these are forcing people to the table, it will be effective. If we stay at these levels and we don't issue credits or we don't negotiate, it will create big concerns for certain businesses that just can't move their supply chain quickly.
Well, yeah, like Apple, which of course makes an awful lot of iPhones in China, and it's hard to imagine them being 54% more expensive for the U.S. buyers. Stephen, you're in the business now of allocating capital. You run a private equity firm. You know, I'm curious. You're hoping that there's going to be a negotiation period here. Are you sitting on your hands right now as you sort of wait and try to determine what the right time is? You know, as somebody now who's in that business of allocating capital, does this give you pause?
I don't think it gives us pause. I mean, now that this is out in the market, people can evaluate the effects and people can make a judgment as to where they think this will land and can invest accordingly. So I think it's good news because there's been a lot of speculation as to what this was going to be. I think now at least we have transparency to what it is. And look, I know the president. The president is a great deal maker. And I think we should take it at face value that these reciprocal tariffs are meant to create a fair and level playing field. And that will require negotiation. And I think there can be, some pretty significant things. As I mentioned, if Apple makes a big investment, it'd be interesting to say, okay, we'll give you trade credits against your iPhone so that you don't have to raise the iPhone price for consumers by the tariff.
There is a belief.
So Mnuchin saying, all right, we have transparency, but he's also caveating that with Trump is a deal maker, NVIDIA right there, 103, and that the deal making hopefully will now commence based on the level of transparency that we got yesterday. And I guess we're going to have to see if that ends up playing out over the coming weeks. S&P 500 right there, down 3.96%. A little bit of a recovery from 539. Now it's not down 4.3% anymore, but still down about 4% on the day. All right, guys, that is it for me. I will be back. So I got some good news for you guys. Based on the text messages that I got like 20 minutes ago, we're going to be starting the market close, not at 3:45. For those that are new here, we do a market close every day at 3:45 Eastern to about 5:30 Eastern. We're starting it at 3 p.m. today because Tom Lee is joining at 3 p.m. So he was supposed to join yesterday at 5 p.m. Unfortunately, he couldn't make it. The confirmation I'm getting right now is that 3 p.m. he'll be joining. So it'll be through Twitter Spaces audio, but I'll be streaming it on YouTube. So I'll be live on the market close at 3 p.m. streaming the audio on YouTube. And we'll have about 30 minutes to get to talk to him. So unless anything changes, which I don't think it will, this is his personal assistant we're in communication with, then 3 p.m. to 3:30, we should have Tom Lee. So hopefully we can get his thoughts on these tariffs, see what he has to say, where he thinks this ends up playing out over the coming months. And then we'll keep going from there. All right, word of the day. Let's see what this word of the day is going to be. Okay, this word of the day makes no sense. I'm going to a different one. This is stupid. Word of the day. This one is weird too. You know what? I need you guys to give me a word of the day because these words of the days are stupid. Look at this word of the day, dude. What is this? Fjord? What is this, dude? Fjord on a day like this? Fjord. Fjord. Of course I would say fjord. Of course I would say fjord. Of course I would. A narrow sea inlet. What's an inlet? I hate when the definition of a word has another word that you have no idea what it means. What's an inlet? The cruise ship slowly navigated the winding fjord, offering passengers breakthrough views. Strong tides surged through the narrow entrance of the fjord, creating swirling eddies. Yeah, I've never heard of this before. You guys know what this word is? Why are you guys saying you know this word? It's Swedish. It's from Norway. I've never heard of this word, bro. Fjord. I thought it was Ford for a second. I was like, what? They're talking about Ford, the stock or something like that? Okay, I guess a lot of these are in Norway. Shout out to Norway. I got to come to Norway one day. Davis says, are you this dumb? All right, Davis. I'm Davis. The reason you know about this, I know why you know about this. I'm not going to say it, but I know why Davis used to date a Norwegian girl. So that's why he knows about this. But yeah, I've not dated a Norwegian girl. So I have no idea what this is. By the way, the Toronto meetup, it's still on board. The market is not down that much yet where I can't afford a ticket to Canada. if we cancel it, and shit's hitting the fan. But April 25th to the 26th, the actual Google Sheet to sign up for all that stuff will be out on Saturday. And yeah, so for those in Canada, Toronto, that meetup will still be happening at the end of April. And that's pretty much it. I think the word of the day from I'm Beneficial right here is sheesh. That is the word of the day. Or if we want to make 2 words of the day, margin call. Margin freaking call. Trumpquidation. Yes. That could also be a word of the day. Did you finish Severance? No, I have not finished season 2 of Severance. Quite frankly, the markets are so entertaining, dude. Why do you don't need to watch 50 Shades of Grey when we've got 500 Shades of Red, So it's like, nothing has kept my attention other than I haven't even been watching West Wing anymore. I kind of got bored of it at the beginning of season 2. And so back to the markets. That's it. It's the most entertaining thing you could possibly be watching. I mean, seeing Trump yesterday, don't tell me that wasn't absolute humor from what Trump was saying yesterday. It was humor and it was crying at the same time, but that is entertainment. Brought a freaking chart to show all these made up reciprocal tax rates. I think that's better than what Severance can give us. All right, cool. So that's it. Oh yeah, in terms of my family's reaction yesterday, my dad was actually pretty chill about it. He was listening to the bit of the market close, so he kind of knew what happened. So when he came home, he was just like, "So Trump fucked us, right?" I was like, "Yeah, I mean, yeah, it is." But he's like, "All right." That was the extent of the financial advising I had to give my dad. I was like, "Yeah, he screwed us." He's like, "All right, he screwed us. It is what it is." I was like, "Yep." And so now we got to wait until this gets unscrewed. All right, cool. That's it. Thank you, everybody. We'll be live at 3 with Mr. Tom Lee. If that doesn't happen, don't kill me. But their team was pretty upset about yesterday, just miscommunication stuff. So they're happy to do it again today. And so he should be live at 3 p.m. We'll start the market close early, and then we'll head into the market close after that. We'll get money market inflows today. I don't think we have any earnings today. Yeah, nothing today. Nothing today. So we'll get money market funds, and then we'll just see how the broader market ended up reacting. All right. Thank you, everybody. Before I leave, let me get a sip of some water. Dude, this thing is hard to open every time the cap is okay, hold on. There's no way I can't open the cap. You guys are going to call me so weak if I can't. Okay, I actually can't open this thing. Dude, it's sweaty. I can't open it. Oh my gosh, dude. Can't believe I'm doing this in front of 3,000 people right now. You guys gonna call me so? No, actually, bro, it's not I'm not even joking right now, dude. It's not opening. Hold on. There's no way we're not ending the show with me not being. All right, we got it. Dude, that would be embarrassing, right? That'd be pretty embarrassing if we couldn't open up the water bottle. It's just, it's a little sweaty, a little nervous because of the stock market. That's all. That's the reason. All right. Trump liquidation day. Because of drinking that water, I'm sure I'll be liquidating later today. And that's it. I'll see you guys on the market close at 3 p.m. with Tom Lee. Bye, everybody. Have a good one. See you guys in a bit.